25 assignments in IBC. So I once again thank you, the IPA team, for giving this opportunity to present our insights on the wholesale and retail trade sector in a Indian economy space, and also the stress related to the wholesale and retail sector and the various RBI and IBC measures in this sector. So broadly, our presentation covers below. Anjali, are you going to present, share the PPT, or shall I share the PPT?
Yes, you can share PPT.
Okay, fine. Yeah. Hope the PPT is visible to all. Hello. Yeah.
Yes, it is visible.
Screen is visible. Screen is visible.
Okay. So broadly, the PPT covers a brief discussion on the wholesale and retail trade sector in the Indian
Ma'am,
economy.
you can see only your Windows Explorer screen, not the PPT. It's a
Okay.
folder. The folder is visible.
Okay.
I think you've shared only the folder window. Probably you have to share the PPT window also, or the entire screen maybe.
Yeah, fine.
Again, only the folder, ma'am. The PPT
Yeah,
is not visible.
I'm just trying to connect to this
Sure,
system.
sure, sure. Sorry.
Yeah.
We can see it now, ma'am. Thank you.
Okay.
Okay, madam, visible now.
Okay. So the broadly, we are going to cover the brief discussion on the wholesale and retail trade sector and the general economic status of this sector and the challenges faced by these sectors, and also the statistics of the NPA in this sector and the ways to improve it, and also the RBI and IBC restructuring norms for this sector. And also I have collected few cases related to these sectors in the IBC ecosystem. So the wholesale and retail trade sector. So the wholesale is the sale of goods or merchandise to the retailers or to the industrial, commercial institutions or other professional businesses or to other wholesalers and related subordinate services. It is sale of goods in bulk. And the retail trade, we mean the market that includes all the activities that involve the sale of goods and services by company, wholesaler directly to the consumer that are usually purchased for personal or for family use. The retailers can be both in retail as well as institutional. So this is broadly a basic definition of wholesale and retail trade. See, in the perspective of IBC, I was just going through the reports of IBBI. The number of cases admitted under CIRP, under IBC pertaining to the wholesale and retail trade sector is around 24.8% in the April to June 2022. So even the Care Edge, the credit rating company for the Q1 FY, they have shared a report that insolvency cases in this sector is in the rise, and they are always in the position of third to fourth in the admitted cases. The first sector being the manufacturing sector, the second one the real estate construction sector, and the third to fourth the retail and the wholesale and the retail sector is always in the third to fourth range regard to the cases admitted under the IBC. So I'll just set the context regarding the IBC by sharing this insights regarding the wholesale and retail sector cases admitted in the CIRP. So basically the sector wholesale and retail, how they are constituted in our economy. See, the entire GDP of the country, the consumption, regarding the consumption, if we see the contribution to the GDP from wholesale and retail sector contributed around 63% to the Indian economy. And see, the wholesale and retail sectors are the critical sectors in any economy, be it Indian or the international space. The kind of innovations happening in this sector keeps these sectors always dynamic. So basically, these are the factors which contribute by the wholesale and retail sectors. They are the one of the key pillars because of the wholesale and retail, the end goods and services are reaching the consumer, and they play a very critical role in any economy. So if we see the latest trend, the global retail index, it shows that we are in the second position. We are ranking second in the market attractiveness for the retail space. So because of the large consumer base, and the top India is becoming a top destination for the retail worldwide. There's a lot of activity going on in the retail space, and a lot of measures have been announced by the government of India and RBI regarding the funding of these sectors. If we see the RBI reports, the financial year 21 and 22 reported the wholesale and retail sector received around $5.1 billion, which works out to around 800 crores. So considering all these factors, which keeps the wholesale and retail sector as a growing space, then why the companies are falling into stress? Although there is a great potential for the market and the consumer base is always there, what is the cause for the stress for these sector companies, which we'll dwell upon in the coming presentation. See, basically, this is a basic slide wherein we are trying to explain the sectors in the retail wholesale space. The wholesale consists of non-durable goods, durable goods, and the electronic markets, agents, and brokers. Retail space consists of many, like food and beverages, stores, motor vehicles parts, and clothing, textile, apparels, electronics, and supermarkets, the departmental stores. They include a lot of various things, and the So the journey of the retail in India. So if we see, the retail industry has been making a lot of trends from the year 2000 onwards, because of the FDI flowing into the sector, and also the technological innovations happening in this space. And if we see, there is the during 2000, it was dominated by local kiranas, and the expansion of modern retail happened from 2000 to 2006 onwards, up to 2006. And then there is a technological penetration into the retail. There's a lot of technological innovations happening around the globe, which is also adopted by the Indian retail space. From 2007 to 19, there is a technological penetration into the retail. And at present, from 2020 onwards, we have various technological innovations happening in this space, and the omni-channel adoption is the current trend in the retail sector. So if we see the general economic status of these sectors, in general, these wholesale and retail trade sectors tend to be very relatively stable and resilient, as people and businesses need to purchase goods in spite of, regardless of economic conditions. However, the sector is not immune to the economic conditions and fluctuations. Its performance can be influenced by various factors such as consumer confidence, employment levels, and interest rates. So in recent years, if we see the trend, the wholesale and retail trade sector has faced several challenges, including the rise of e-commerce, changing the consumer preferences after the COVID pandemic. If we see, there's a lot of shift in the consumer preferences post-COVID. The healthy lifestyle and the changes in the habits of the people. And in spite of these challenges have changes post COVID has resulted in the shifts of in this sector, this regarding the structuring the business models. And there are a lot of the whole retail space is adopting to the new market conditions based on the consumer behavior and also prevailing conditions. See, overall, the wholesale and retail sector remains always a critical part of the economy. They provide through this, recently the government announced the wholesale and retail sector under the MSME. For various aspects like funding, restructuring of regarding the restructuring of the loans. So they always remain a critical part because majority of the sector is operated through these wholesale and retail. The end, it reaches the wholesale retailer, reaches the goods and services to the end consumer. So there are a lot of trending ways happening. The companies are innovating the way they are reaching to the customer. So the wholesale and retail sector is a critical part of economy, contributing to the jobs, and they are supporting the economic activity. Its performance is always an indicator regarding the broader economic trends in the important sectors to monitor. So this is one of the economic status of the sectors. See, even the rapid digitization in this space, increasing the internet penetration both in rural and urban India, the growing scale and the scope of online players have changed the consumer habits. And even the companies, they are going in a different way of advertising and marketing the products. The retailers are reaching the end consumers through various innovative methods. The social factors which have contributed to these wholesale and retail sector is shifting consumer preferences and demographic rising awareness about environment and improved economic ability. And the retail space is technologically driving the market. It's growing at a faster pace. if we see the trends in the retail sector, the retail industry has achieved around 96% of the sales in 2021, rising the demand from the customers. The purchasing power has led to this growing demand. And even the collective effort of the banks and the retailers are enabling consumers to go for durable products. Like these days, the easy credit is available to the consumers through various financing. The increasing trends of the sales is through various factors. The foreign retailers are also entering the market, and the retail trading sector has attracted around 4.11 billion till June 2022. About 50% of FDI is into the multi-brand retailers. The FDI in the single brand is now the FDI is allowed through automatic route. See, the government has recently approved the PLI scheme for textile products for enhancing the India's manufacturing capabilities over a 5 period. So the Indian retail industry is still emerging as the most dynamic and fast-paced industry. The accounts, the GDP and the growth of employment, which shows the world's 5th largest global destination, as per the UN Conference on Trade and Development report. See, the sizable middle class and the nearly unexplored market, Indian retail market, the urban and the semi-urban are the key factors which are supporting these FDI. And see, if we see the retail space, the retail sector has seen a lot of investments, and the companies, the Ministry of Statistics and the Indian Consumer Index, they are reported the retail space has attracted more FDI between 2000 to 2022. In the last 22 years, but the growth in this sector is at a rapid pace from 2010 onwards. If we see, a lot of big companies are entering these retail space like Aditya Birla, Wipro Consumers, Reliance Brands, Aditya Birla Group. And recently, the financial year 2021, the government has announced this the digital payment. If we see the digital payment transactions, which in this space, it stood at 8,193 crores. And various government initiatives are also provided to improve these sectors. Some of these are like the schemes announced for the textile products, and RBI announced plans for a new framework for retail digital payments in offline mode to accelerate the digital payment adoption in the country. The Andhra Pradesh government has announced a retail parks policy, anticipating the retail investments in the next 5 years. And government may change the FDI in the food processing units, and they are going to permit the e-commerce companies and foreign retailers to sell made in India consumer products. And the MSME has announced, as during the starting of the presentation, I have mentioned that the Ministry of MSME has announced inclusion of retail and wholesale traders, MSMEs, retail and wholesale trade into the priority sector under the RBI guidelines. See, some of these sectors are in the booming stage. In as of now, the retail space is seeing a lot of changes, but the sector still faces some challenges. The post-COVID, the reduced consumption, the consumers are started saving for medicals, and for like there is a behavior and lifestyle changes which might reduce the consumption of certain products. and there are some external policies which are going to affect the wholesale and trade industries. The government policies, the trade wars between the US, China, and the recent Ukraine war, the pandemics and natural disasters also contribute to the factors for the failure in this sector. One of the disruptive technologies like rise in e-commerce will reduce the brick and mortar companies' stress. And due to the online deep discounting, the price disparities are offered online and offline. There is a price variation. If we visit various websites, we will come across there is a price variation for the similar product. So due to these discounts, there will be a stress to the companies which are not in line with these market practices. So the omni-channel strategy, that is integrating both online and offline, is also a challenge for the existing brick and mortar companies. If we see the multi-channel retailing, the challenges are inventory across sales channel and demand and supply gaps are there due to the multi-channel retailing facilities available. These are the few challenges which are common across the wholesale and retail sector. Along with this, there are few more challenges which the brick and mortar companies face by not adopting to the technologies and change in the and modify their structure and the plans according to the market trends. If we see, there is a fallout of retail company business models during the pandemic, and also due to the change in technology and innovation. During the COVID work from home guidance, the coffee beverages business, the sales fell by 63%, and some of the companies went into bankruptcy. They filed bankruptcy, and the stores, fashion, cosmetics. So there were the stores were not open during pandemics. They were operating online, and few of the online facilities also were not available during the first and second phase of the COVID. Because of this, the retail space, the companies which are operating in the retail stores and cosmetics, they went into stress. And as the technology is innovating due to the emergence of this electronic vehicle technology and the intense competition for the new models, the quality conditions, the auto retail sector is also facing difficulties for adopting due to the changing technologies. And the other sectors, like the reduction of purchasing power of the consumers and lower level of disposable incomes, and the impact of low demand of the durable products, these factors led to the fallout of retail company business models. Although the sector is facing the few of the challenges, there is a revival in the sectors. And during COVID, there were a lot of tourism companies, they went through the stress. But as the economy is booming, the post opening up of after lockdown, these companies are coming back. So I have covered up to the brief. There's a brief discussion on wholesale and retail sector and the general economic status and the challenges faced in this sector. And any members have any of the experiences in this sector can share their views on this up to the points where I have gone through. I've discussed a brief on the how the wholesale and retail sector and the general economic status and the how the wholesale retail sector is contributing to the Indian economy. Any questions, sir?
Nothing, ma'am. Nothing so far.
Okay. Okay, thank you. And some of the challenges which the retail sector is facing is through the external factors like change in the government policies, global pandemics, and high debt. High debt burden is also reason companies coming into insolvency because of the poor management and also not adopting to the technologies. And there are challenges in multi-channel retailing, the inventory across sales channels and the mix of talent to cater to the both physical and online channels are also one of the key challenges in this sector. And higher cost of investments, the companies which are investing into the building and physical infrastructure, and they are spending a lot of money on personalized campaigns. And there are some specific regulatory and tax mandates to these sectors, to these retail companies operating online. If we see the IBC perspective, the statistics of NPA in this sector, there is a 24% jump in the insolvency cases in wholesale retail trade during Q1 F3 from a year ago. This is as per the Care Edge credit rating report. So there is a jump in insolvency cases in this sector. And the share of the trading sector is around 567 cases. This was some 454 cases in June. And the total is around 5,636 during the reported till the first quarter. So the manufacturing sector, as at the start of my presentation, I was mentioning the retail and wholesale sector is always in the space of third or fourth place. The sectors which are getting admitted into the CRP. So the timelines which the CRP, the CDs, the company's resolution process, on an average, the IBBI report published shows that the wholesale and retail sector, it is taking approximately 243 days to resolve a company. So this I have collected a basic like from the RBI website on the annual report. The sector-wise gross NPAs of the banks from the past 21-22, the agriculture, MSME and non-priority sector. In this, the percentage of NPA in the agriculture also, we have the wholesale and retail sector companies operating. The wholesale retail sector falls under MSME. So there is a considerable increase in the gross NPAs of the banks reported. This is as per the annual report of RBI from 21-22. So see, the government is taken various measures to improve the retail industry through the schemes and the new framework, which the digital payments through the CBDC, they are trying to get the space into the digital payments mechanism and the retail parks policy. And the government of India is allowing 100% FDI, because of which we we are seeing there's a lot of happening in the retail sector. And the ease of credit access for wholesale and retail sector through credit guarantee fund through this CGTMC mechanism, the credit limit is extended to 2 crores. It was 1 crore. Now the limit has been extended to 2 crores. This is also one of the slide for the deployment of bank credit to various sectors. If we see, there is the bank funding to the gross bank credit to the sectors during it is the latest update, January 2023. If we see, there is a rise in the bank funding to the wholesale trade sector and also retail sector. There is an increase. It was 3.5. There is an increasing trend by the banks for this sector funding. So if we come to the restructuring framework to the sector, the RBI had in the early 1970s, there was a term restructuring. The RBI issued guidelines. It was pertaining to the restructuring of financial aspects regarding the natural calamities and financial complications. So in these guidelines, the RBI stated that companies undergoing any financial crisis, they can voluntarily undergo this corporate restructuring. The only 75% of the creditors were in favor of this proposed restructuring, and all of them are considered in favor with some modification. That restructuring is only done to those enterprises which had taken loan from various creditors, and the limit was 100 million to be eligible under these restructuring for during 60s. And in case where the enterprise is a bank or an institution, it was 20, it contains 20% share in loan of the company. In 2012, if we see these through this corporate restructuring, around 292 cases were managed with 1.5 lakh crores, and which increased to 401 cases, and the restructuring had 2 lakh crores. Then after the draft IBC, there was a provision made which contained the whole provision for restructuring. If we see post IBC, the restructuring happens through the section 7, 9 or 10. The companies which are under NPA, which had default, either the FC or the operational creditor or the company by itself under section 10 can go for admitting the company into CIRP, and the process through which the CIRP, there is a resolution for the company, and in case there is no resolution, the company goes through the liquidation process, and the liquidator sells the assets and distributes to the stakeholders as per the section 53. So this is the under IBC, and even the existing companies can also go for withdrawal. If we see during COVID, the various sectors have gone through the stress because of the pandemic. The RBI has issued a circular regarding the restructuring, and June 2019, if we see the circular, they are giving an advance rollover of credit facilities and sanction of credit facilities and release of additional funds for an account to aid the default, and also existing credit limits were enhanced, and compromise settlements for the payment were extended. 3 months moratorium was given. Then the pandemic, during the second phase of the pandemic, their restructuring circular was issued again by RBI, the resolution framework which permitted restructuring for COVID related stress. So the threshold being the 250 million for this implementation of this restructuring. And for individuals and small businesses also, the restructuring was permitted. And the implementation of the plan regarding the resolution provided an exposure, and the resolution framework to be eligible, the exposure was around 250 million. And the RBI had various measures for restructuring the stress in this sector. Then we have informal and bilateral workouts also. So the parties in these going through the stress for restructuring, they can go through informal or bilateral workouts. So the parties can go for out of court informal settlements by arrangement with creditors. The creditors and debtors can go for bilateral workouts. And this can be through mediation or conciliation. We also have a mechanism under Companies Act, the scheme of arrangement. A debtor company can can resolve its debts by way of entering into compromise arrangement with the shareholders and creditors. This is through NCLT supervision and as per the provisions of Companies Act. This restructuring requires, just excuse me, I'll just take the call. Sorry. Yeah. So this scheme of arrangement under Companies Act requires consent of 3/4 like special resolution and 3/4 of the creditors. That is 75% of 3/4 of your creditors has to vote in this scheme of arrangement. And it is purely a debtor-driven process. And also there is an RBI permitted OTS due to the COVID crisis. The retail industry has witnessed a significant disruption during the COVID. So it is said that banks have made huge investments into the retail sector. And if the sector is getting on its feet and a significant portion, if the sector is not getting into its feet and the sector is not adopting to the changing technologies and changing to the consumer behavior, the brick and mortar companies and the companies which are not adopting the innovation in the products and the innovation in the method of their reach out to the consumers, there will be a significant portion of the investment that could turn into an NPA. So these are the various RBI restructuring framework for the retail and the wholesale sector. First, we had during 1970s, we had a restructuring guidelines wherein the RBI considered various measures for the restructuring. And also after 2000, during 2012, also there was a the sector had restructuring around 292 cases. But if we see, there is a significant progress after the IBC. There is a significant progress in the resolution for the companies in the wholesale and retail sector compared to the restructuring happened during the RBI restructuring framework. And during pandemic, we had a RBI master circular, RBI master guidelines restructuring the default by moratorium. And these are the various other modes which are available for restructuring. That is through bilateral workouts, OTS, and then settlement between the creditors and scheme of arrangement and the one-time restructuring which was permitted by RBI. Now, let us discuss the few IBC restructuring framework which we have under IBC code for these sectors. See, earlier we had a minimum threshold of 1 lakh for admission of the company into CIRP. So now the limit has been increased to 1 crore. So there is a considerable amount of companies which would come to CIRP has reduced because the wholesale retail sector, the limit, threshold limit. Further, the resolution of defaulting companies happens through a CIRP process, and if the CIRP process does not receive a resolution plan and there is no resolution for the company CD assets revival, the liquidation happens. And there is one more mechanism available, but that is for a solvent company, that is voluntary liquidation. We also have the recent amendment through which the notification IBB has introduced the prepackaged insolvency framework for MSME. The main aim is to provide relief and resolve the stress in the MSME sector. This is the CIRP process under IBC is a the company comes under the control of the RP, and the powers of the board is suspended, and they have to support the RP, and the entire process is taken care by the RP under the guidance of members of committee of creditors through the NCLT orders. And here the pre-pack insolvency was offered, wherein the debtor in control was the one of the key facility which was given to the company, the debtor in control. And this was one of the offer, like the notifications by the IBBI, which would support the MSME. This was released during after the pandemic, and the sector expected the companies, MSMEs operating in this sector would kick off. But as of now, because of the support, either maybe if we see, it may be the lack of support by the banks on the process, or there is no legal framework by the framework or the policies by the bank, or there may be the sector awareness has to be spread about this pre-pack to the MSMEs. The process did not kick off. Actually, as of now, there are only around 3 to 4 cases under this, and only one case where the resolution was proposed in the company. And there are no final orders in this pre-pack. This is also one of the effective restructuring mechanism which was offered. If the awareness spreads and the bank has a proper policy, this is also going to be one of the supporting guidelines or the framework to the MSMEs. So here, one more is the section 10. If the company, the section 10 is the one of the available provision to the companies operating in the retail and the wholesale sector, wherein the company by itself can go for the admission into the CIRP process and resolve its stress through a resolution framework. So this is section 10 is also one of the restructuring framework available to the sector. And the section through section 29A, the MSMEs operating in this sector the promoters of the company can give the resolution plan because the section 29A is not applicable to the MSME. So this is also one of the available source for the restructuring of the existing debt of the company operating in this sector. So IBC is effective in bringing the resolution to the distressed CDs, and also they are helping the recovery to the creditors. Although the IBC aim objective is not the recovery, but the most of the creditors are looking out for the recovery through this IBC applications. See, the RBI believes that IBC is probably the best mechanism to recover their dues. So the effectiveness and to compare the resolution value to the liquidation value on the total loans, the RBI in their latest report said that the realization through IBC was close to 201% of the liquidation value. So through this, there is a plowing back of the credit to the market. The credit availability will increase to the other sector and the companies, for which in turn helps the economic growth of the company. One of the other things which I would like to highlight here is the companies which are getting admitted into CIRP or liquidation. In turn, they also have a wholesaler or retailer client base. So the client base for these companies which are admitted into CIRP or liquidation, they also suffer because of the orders, because of the reduce in the operations, change in the management. So the wholesaler retailers to these companies client base also suffer. So if we see the restructuring framework which was available through SARFACI or other debt restructuring acts, the IBC is the fastest mechanism available for the restructuring. Although there are certain practical issues because of which the CIRP is not progressing as per the within the timelines. The main is the NCLT benches. We have now enough sufficient bench members to take up the applications, and also many the frivolous or miscellaneous IS filed into the companies where resolution plans are offered, and the promoters non-cooperation, and there are many factors which are contributing for the delays in the CIRP process. But this is one of the fastest mechanism for restructuring of the company's stress. Even though the period allowed is 330 days, some of the companies are taking more than 400, 500 days and all, but still there are companies where the resolution plans are approved within this framework, and during this process there is the RP has to carry on various functions which are related to these avoidance transactions. So the avoidance transactions also, the whatever the company has gone into the stress, it will pay back to the creditor or to the CD or to the beneficiary to who has suffered because of these transactions in the company. So if we see since IBC's inception, as at March 22, 45,252 companies have undergone CIRP. Out of this, 3,406 companies are closed. That is CIRP. Through 3,406 companies are closed through CIRP, that is through the resolution. And 731 cases are settled, and 586 cases are withdrawn. So around 1,600 cases are ended in the liquidation. So the total recovery to the financial creditors is estimated around 32.89% on their claims. So I have covered the statistics of NPA in this sector, and RBI and IBC restructuring for these sectors. Any questions, sir? so far? So I have a few case laws in these sector companies. The contract logistics versus ITC. Here the operational creditor has filed an application under Section 9 against ITC Limited for around 83 lakhs arising out of some invoices. However, the 3 invoices were between 2017 and 19. The operational creditor used to provide the warehousing services for the retail division of ITC. So that is lifestyle retailing business division. The operational creditor has sent a demand notice on 19th February and thereafter he has filed a Section 9 application. Stating that there was no prior dispute and the reply to the demand notice and the dispute is irrelevant. Hence, there is no compliance of Section 8 here. However, the court found that there was no compliance of Section 8 as there was a pre-existing dispute present, which was clear through the correspondence between the ITC against this operational creditor. That is, there is a clear deficiency. So when there is a deficiency in services, so the dispute is already reflected in the current transaction and the demand notice has not been complied here. So it is not complied, hence Section 9 application cannot be admitted. Here the companies both were into the retail companies. So there is a process which has to be followed for Section 9 companies. So the companies which are filing an application against the CD which is into wholesale or retail, be it any company corporate data which has to file an application under Section 9, they have to follow the process provided and they have to issue a notice under Section 8. And if there is a pre-existing dispute, then there is a deficiency of services for which the complaint is filed, then there is no scope of admitting the application under Section 9. This was held in the in Contract Logistics Private Limited versus ITC Company. And we have one more case in Bizarba India Private Limited versus Cecil Retail Management. Here, a Section 9 petition was filed. Both the companies were involved in the retail trade industry. And the operational creditor used to has provided and installed a retail scale machines to the CD as per the agreement. As per the MOU, in 2016, a running account was maintained by the OC for the payments. A demand notice was also sent for rupees 90 lakhs. The corporate data did not appear for any hearing. Hence, ex parte was given. The tribunal admitted based on the evidence of invoice, demand notice, financial transactions, and the bank statements indicating the default. See here, even the companies operating under the small companies where the demand notices were sent, and if they are not attending to the hearings, the tribunal will admit the application ex parte based on the evidences provided and sufficient evidences on the transaction. So the companies has to take care of this aspect. They have to appear before the CD, the NCLT. If they have anything to say, they have to file their counter in the application. And one more case we have is Brand Realty Services versus Sir John Bakers. Here the operational creditor is a consultant cum investor with the CD, and he has provided an advisory services for business promotions and marketing. The corporate debtor approached the OC for investment and consultancy services for setting up a new retail outlet. The OC invested some amount and also supplied the consultancy services. And in setting up a new retail outlet, the operational creditor and CD entered here into an agreement in 2014. That was further ratified by an account settlement agreement. So there was an account settlement agreement in this case. The CD agreed to pay the commission amounting to around 33 lakhs through a post-dated checks. Here, the presentation of the said checks, the CD approached the OC and requested to hold the presentation of checks for the payment before the banker. They agreed for an RTGS and post-dated checks. Acting on the representation made by the CD, the operational creditor held the checks did not present the same, and the CD has neither taken any steps for the RTGS transfer or replace the checks. So they here there was an agreement for monthly payment up to 66 months through a post-dated checks. But few checks were dishonored, and the tribunal noted that there was no, the CD, the operational creditor has sent a reply. The operational creditor has filed a case. The demand notice was sent. The tribunal noted that there was no reply to the demand notice as there was no evidence of tracking the number, and the tribunal went on to interpret that a debt, default and operational debt, whether there was any operational debt. So the tribunal noted that the debt arose is out of the settlement agreement, not against the invoices. So the debt here was because of the settlement agreement, not against the invoices. So the tribunal relied on two judgments and noted that there was a breach of settlement agreement that would not be an operational debt, and the IBC cannot be a recourse as an adjudicating authority and not a debt recovery forum. Here, what has happened in this case is there was a settlement agreement for the services provided. So the NCLT noted that the breach of the service settlement agreements would not be an operational debt. So there were no invoices raised here. There was a settlement agreement, and the breach of settlement agreement is not an operational debt. And one of the cases is in the retail space is Future Coupons Private Limited versus Amazon. This is the Reliance case where the Supreme Court has put a stay on the process on the approval of the final scheme by NCLT. Although the scheme was approved by the Competition Commission of India and the SEBI, the NCLT is waiting until the merits of the case were decided by the Supreme Court. It was argued that it takes 16 stages for the scheme to be implemented, and the scheme by the Future Retail proposed here to the Future Retail proposed is at the 8th stage, and it may take around 6 to 8 months for the remaining process to be completed and the assets to be alienated. Only after that, until then, Amazon is not prejudiced. It was argued that the liberty be given to the company to approach to the High Court for continuation of NCLT proceedings. Or else there will be a delay which will cause more expenses to pile up and which will lead to the insolvency. Hence, the agreement between Future Retail and Reliance became redundant because of the order. So we have these few case laws which pertaining to this sector. One of the cases is the Future Coupons Private Limited versus Amazon, and wherein the NCLT has settled few things. So if we see there is a significant, if we see there is a significant deployment of bank credit to these sectors, and the sector is a dynamic sector which is uh, catering to the Indian economy, GDP, and the the funding, the bank credit to these sectors, there is a significant growth, and the retail space, there is a lot happening, and there are challenges in these sectors, because of which there could be a stress in these sectors, and which in turn will lead to the NPAs and defaults, which may the retail sector may contribute to the IBC cases in future. If the sector is not adapting to the changing technology and strategy, and not strategizing according to the requirements of the market. So RBI has various schemes, and through various sectoral funding, the sector is through startups and through various initiatives, the entrepreneurs are entering this area, and they are developing this sector, and multiple jobs are created, and it is contributing to the society. The wholesale retail sector is contributing to the Indian economy, and the retail and wholesale sectors there is a deployment of bank credit to these sectors, and there is a scope of stress in this sector. Already the IBC cases which the wholesale and retail sector contribute to they are in the third and fourth position in the sector wise stress in the IBC cases. Sir, any questions? Any questions so far, sir?
Wait, sure.
So any questions, sir? If we see the future approach, one of the few measures which IBC has announced is the cross-border insolvency framework and the group insolvency resolution. So these are also going to, the concepts of cross-border and the group insolvency also going to be the frameworks which are going to be the significant processes for the retail and wholesale space. So, but currently the IBC is not sufficiently equipped with for the cross-border insolvency. So the insolvency law committee has constituted a model law for this, and the certain modifications as per the unilateral model law is proposed for the insolvency approach across the countries. So the draft bill on cross border is to strengthen the insolvency framework. There is a group insolvency which will be introduced over the coming years. The resolution as of now is for the standalone companies. The companies which are part of large conglomerates or the groups should ideally be resolved as a groups. So the NCLT in the past have ordered consolidation of entities in the same group, like Videocon. There is a group insolvency here in this case. So the wholesale retail sector, there is a scope of utilizing these mechanisms provided under IBC. The futuristic approach for the processes from the IBC, like cross-border and the group insolvency, resolution of the companies, group subsidiaries and all, the companies will fall under the group insolvency cross-border for these sectors can be, the corporate data can use these processes. So this was one of the dynamic case laws under NCLT, the arrangement between the Future Group and the Reliance company, which Future coupons were operating under the retail sector. This was the largest transaction wherein the Amazon, one of the parties in the Future coupons, has approached the for the arbitration. So this is still under the pipeline for the 16 stages. There is a 16 stages process with the NCLT, which has to conclude the transaction. So the it may take around 6 to 8 months to complete this remaining process, and the assets will be alienated once this process is concluded. Can we take 5 minutes break? The team from ICSI IPA, Trisha.
Sure, ma'am.
Yeah, we'll take 5 minutes break.
Okay, ma'am. Okay.
Yeah, thank you.
Is this session over? Hello team, I say sorry. यार कोई है ही नहीं, क्या करें? Presentation is over now. Okay.
So can we resume the session?
Ma'am, you can start.
Okay. So I have just briefly covered all the few points on the retail and the wholesale sector, the economic concept of this sector and the restructuring framework available for these sectors under the RBI and the IBC and other acts and the other modes, and not under the legal framework, that is through the other modes for restructuring. And there is a lot of development happening in the retail space for the past few years. And we can see that in the market, the business to business grocery space has increased, e-retailers digitizing the selling through the stores. Amazon also launched smart Kirana stores, and the Reliance started their own base by the digital stores, and Flipkart also partnered with stores. Reliance partnered through WhatsApp through the stores for the groceries. And due to rapid pace of the development in the retail space happening online, the government has proposed an e-commerce rules protecting the government has introduced e-commerce rules protecting the interests of retailers and consumers. And the guidelines were addressed for pricing, country of origin, flash sales, returns, private labels, and other topics. Even the foreign firms are only allowed to operate in a marketplace model, that is for facilitating between buyers and sellers. Guidelines are issued. The retail industry is consolidating, and the top retailers are acquiring majority of the positions in the startups, technology firms, and other retailers. The Walmart acquired Flipkart, and the Reliance acquired Future Group, and the Reliance and Tata Capital acquired startups in July through the V-Mart. The V-Mart agreed to acquire the Arvind Lifestyle and the Unlimited stores. This is strengthening their presence in the south and western regions. So one of the retail space, the augmented reality is the virtual spaces are available to the customers to have the experiences, and for not missing the offline experiences. So the digital savvy consumers are increasing, and the change in the retail space is the big sharks are taking over the startups and the ideas for the in the retail space. And there is a lot of scope of growth in the retail sector, and the banks also funding this. And if the brick and mortar companies are not adopting to these latest developments, there will be a stress in this sector. And almost 70% of these stores will be smart points, where a new neighborhood grocery, convenience stores like pharmacy, diagnostic center, the financial services will be innovated through this. And the Tata Chrome also plans to open around 75. They have already opened around 70 stores in financial year, and another 100 they are planning to open. So there is a lot of scope in the retail sector, and because of the opening of the economy after the COVID, the sector, the wholesale, the retail space, there is a growth, and which will contribute to the GDP. And in turn, the wholesalers are also the one of the players in the for the retailers. Although the retail, directly the companies are operating through retail sector, there is a lot of growth in the retail space in the GDP of the country. So I would like to present a few facts on the one of the cases in this future retail. Here, the brief facts were the agreed by the sale transaction between the future retail and the Reliance Group. Amazon initiated for the arbitration. So the proceedings reported before the Singapore International Arbitration in terms of the agreements between the future coupons and the Amazon agreements. Amazon filed an application for emergency relief with the registrar of the Supreme Singapore Arbitration Court, seeking interim prohibitory injunction to prevent the Future Group and the Reliance from taking further steps in the transaction with the Reliance Group. The Future Group also filed a suit before Delhi court against Amazon for interference in the scheme for the sale of assets. This is one of the biggest transaction in the retail space, where the emergency arbitrator injuncted the Future Retail from taking any steps to materialize the deal. So the including the injunction against the various regulatory authorities. However, the Delhi High Court came to a conclusion that regulatory authorities had to pass appropriate orders considering the representation from Future Retail and the Amazon for before granting the approvals. So the Competition Commission and SEBI also approved the scheme between the Future Retail. The composite scheme of arrangement under section 232 was before NCLT for consideration in 2021, which is still pending. The Amazon filed a petition for enforcement, and the Delhi High Court their order in 2021. They have enforced the emergency award. When the matter was carried by the Amazon to the court allowed the NCLT proceedings to continue with the final order of the sanction of the scheme. Then the final order during 2021, there was a court order on this, that the NCLT has not adjudicated on the merits of the case, and there was no reasoning in the answering the legal questions concerning the maintainability of the appeal. So aggrieved by these orders, the single judge in the High Court held that FCPL, that is Future Group, filed appeals in this special leave petition with the Supreme Court. The court by interim order passed the order that the senior counsel at length has to pursue the material and record and issue notice in this matter. Then this matter was listed, and thereafter the applications filed for vacating the emergency arbitrator was dismissed by the arbitral tribunal. Then there was a detailed order in this in February 2022 through a special leave petition. The leave was granted, setting aside the impugned orders in this case, and these matters were again posted for the arguments, and the senior counsel as held for continuation of the proceedings before the NCLT. Then again in February, when the matter was taken up through the writ petition, the NCLT for the scheme, and there were around 16 stages through which this deal has to happen. One was the pronouncement of order by NCLT bench, then the receipt of admission, then dispatch of notice and advertisement of notice in the newspaper, then filing of requisite documents with ROC and RD, and then an affidavit has to be filed not less than 7 days before the meeting. Then there should be a meeting of the entire process, which is as per the section 230 to 232. Meetings of shareholders and creditors have to be held. So as of now, this process is at the second stage.
नहीं मेरे को पहले वो इंजेक्शन का सुन के मेरे को पहले देख लीजिए क्या बोलता है डॉक्टर। ये वापस आएंगे इंजेक्शन लगाएंगे। तो कुछ काम है क्या? काम है बेटे को? Oh yes, correct.
Yeah, Poonam, you are on. You have to unmute. So the Future Retail and the Reliance, the arrangement scheme of arrangement for this proposal.
CS Poonam Jain, madam, please mute your mic. Madam Poonam Jain, please mute your mic.
Okay, so this process had 16 steps to continue. The process has to go through the following 16 stages, out of which there are around 8 stages which are completed in this arrangement. The meeting of shareholders and the creditors have been held. Then the chairman has to file a report on the meetings. Then the petition will be filed with NCLT, and the admission of petition will happen based on the hearings. An advertisement will be released, and the petition for if the anyone has any thing to file against this admission, they have to file with the NCLT. Then a notice of final hearing will also be given to the regulators or to the objectors who submit an objection to this transaction. Then filing of affidavit and confirming the service of notice and publication of advertisement. The liquidator appointed here will file an affidavit on the process, and then a final hearing will be held by the NCLT for approving the scheme. And once a final hearing happens, the a final order will be passed sanctioning the scheme. So it may take around 6 to 8 months for completing these 15 steps. So as of now, the process is at the stage is at 8th stage. They have completed. So in the context this, the arbiter in view the NCLT proceedings beyond this stage, the approvals may take the expeditious process based on the filing of the petitions and on the reports. Okay. So there is a question from Rajiv Makwin sir regard to the stock mismanagement by such companies. Sir, you mean to say the experience stock mismanagement by such companies? Rajiv sir? Rajiv sir? Okay.
Ma'am, he is online. He is writing that his audio is not working.
Yes, sir. I have seen, sir, the stock mismanagement regarding the wholesaler, retailer, wholesaler stocking up the goods in the warehouses and producing the statements to the bank regarding their funding. I have a question to sir. Actually, is he asking me about the stock mismanagement by the companies by piling up the stock in the wholesale, the warehouses? Sir, I have my colleague Anjanelu sir. He is also an insolvency professional. Okay. I got your point, sir. And the companies are mismanaging the stock and also not maintaining proper records. This is regarding the wholesalers. I have my colleague Anjanelu sir, who is also insolvency professional. He is taking care of the companies which are under CIRP operating CDs. So maybe I think he has the better answer for the question, sir. He is there in the webinar. He'll answer the question. Sir, actually, I am handling the assignments on the compliance aspect. We have handled around 25 assignments under IBC, and I am managing the corporate debtors, legal compliance, and the COC meetings, NCLT filings, and also coordinating with all the stakeholders. Regarding the going concern and regarding the CD aspect and the financial aspects, I have a little less experience, sir. As a banker's perspective and as a going concern CD, you are asking the question. So I will get back on this, sir. Can you share your email ID? We'll get back on this question, sir. I'll reply to this question. Noted your mail ID, sir. We'll get back to you on this question. Sir, any more questions? I have briefly covered on the points. Any banker or any experienced professional regarding the banking in the banking sector, can they be able to answer this mismanagement of stock by the company, sir, by not maintaining proper records? This is one of the issues faced by the bankers who are lending in the wholesale sector. ICSI IIP team is here. Trishala.
Yes, ma'am.
Yeah, I have completed my PPT, my presentation, and I have a question. I have taken up the question also.
Ma'am, if anybody wants to ask the questions, then they can ask.
Yeah, actually, I went a bit fast in completing my PPT. And we started the session sharp 9:30.
Yes, ma'am. Ma'am, just give me 1 minute. I'm just telling.
Hmm. Hmm. Um, Sir, I'm able to recollect one of my experiences during CIRP, sir, regarding this stock mismanagement and not maintaining proper records. So the company which was under CIRP was a poultry farm, and the poultry is an unregulated and the most unorganized sector. We have handled around 7-8 sector companies under CIRP. I felt that poultry was one of the unorganized because the promoters were maintaining completely on without any records, and the stock was already always undersized, and they used to report us. They have reported always the RP used to manage the company as a going concern. So we used to deploy our staff there with a limited staff and the security reporting to us. But majority of the operating staff were from the promoter side. And the how much so ever we took the police protection, we took the NCLT orders, and we filed NCLT. We sought NCLT orders for filing criminal case against the directors. In spite of that, they used to mismanage the stock, and because they had a subsidiary and the related companies in the operating in the same premises, because the land belonged to the group companies, related parties, and the infrastructure on that was the CDs. So the promoters used to mismanagement, shifting the stock from one place to another, and they used to report these birds belong to the CD and these does not belong. And there was no proper records. Even our staff used to go there, 1 or 2 people used to go there, but the records were maintained by the existing staff only. So the directors have misappropriated around 2 crores in the and they have done the transactions through cash with the existing wholesalers and retailers for the egg and chicks, and they used to they have mismanaged, and we have filed a criminal case. As of now, the company is under liquidation. The process is still on for the mismanagement. So this is our experience, my experience during the CIRP process for the stock mismanagement and the not maintaining the proper records. Maybe in the sector wise mismanagement of stock and the not maintaining the proper records, regarding this, I'll get back, sir.
Madam, can you tell me about the present status of the future group CIRP process as of now, when it will be completed?
Sir, this is under section 230, 232 scheme. There are around 16 stages, sir, through which they have to complete this process.
Yeah.
As I have explained, out of the 16 processes, the 8th stage is completed, sir. That is the meeting of shareholders, creditors have been held. And the chairman has to file the report with the NCLT, and then a petition will be filed based on along with the chairman's report. It may take around approximately 6 to 8 months, sir. Maybe 8 months, yeah.
But perhaps they have already closed their retail outlets.
They have closed their retail outlets.
Yeah. In most of the cities.
Yes, yes. Even I have seen in Hyderabad, sir. Yes.
So its value is going to be deteriorated day by day.
Yes, sir. That is what even the court has held. Even they said the appropriate orders have to be passed and regulatory approvals has to be expeditiously passed so that the value will not get deteriorated.
Ma'am, I've seen Reliance has opened its stores in most of these, outlets.
Yes, sir. Yes, yes.
So how Reliance is taken over without the completion of this IRP process?
I'll get back, sir. I'll just get back, sir.
So in most of the cases, all the property is taken by the future group all on lease, and they are unable to pay the rent to the lessor. And Reliance has taken over all the premises from the lessor by paying them the rent. And stock were misappropriated, as per Madam already said. There were no stock, they have fulfilled their own stock in
Yes.
most of the cases.
Yes, sir. Yes, sir. The stock they have already appropriated, right?
So the lease agreement we executed earlier with the future group were also cancelled on what basis?
When they are unable to pay the rent for last 2 years, 1 or 2 years.
But the matter is already sub judice before the NCLT. How the landowner can take over the property without the consent of NCLT? As per
Sir, when the property is in the name of future retail, then there will not be a question of this. The properties were taken on lease, so it can be cancelled anytime, no? Even
When
the
lease has not been paid for the last 2 years, lessor has cancelled the lease.
Yeah. And some other person can take the lease. The leasehold properties will not have. It's not like IBC, no, sir. It's not like IBC section 7, 9, 10. It's under section 230 of the Companies Act. Their moratorium will not be there.
okay, okay.
Yes.
And sir, most of the cases, Reliance taken over the stores in just 24 hours in 1 day. At morning, when staff of the future group reached the outlet, there were the hoardings that hoarding has been changed.
So is it was with the consent of the future group or without
consent with the lessor? They have offered all the lessors, or it may be because the litigation were going on with the
For long time. Yes.
they have make a formula कि you will take the money and we will bargain with the lesser. They have done the game.
Is it not a hostile takeover?
With the consent of the क्या कहते हैं future group, they have managed.
Sir, and as I have mentioning during the presentation, the scheme was already approved by SEBI and CCI, sir. It's not hostile. So only it is
No,
pending
I
at
think
the.
there are two cases, ma'am, separately. One is the compromise arrangement you're talking about, which was they had an agreement with Amazon and then that failed, and the scheme of compromise is going on. There's other thing is it's been admitted into insolvency also, where Amazon wanted to intervene as an interested party, but the NCLT rejected that and it's been admitted
Rejected,
to
yes.
insolvency.
Yes.
And
It's rejected.
latest news I read on that was that the RP or IRP has filed avoidance transactions to the effect of 14,400 crores also. So it is also under insolvency. I'm just looking up the exact entity that's under insolvency, so we have a better picture. But there are two separate cases. One, as you
Separate
rightly
cases, yes.
mentioned, the compromise arrangement is also there, and then separately the insolvency proceedings are also there.
Yeah, there are two entities, no? Here, there are two entities.
I think so, yes. There may be different
Yes.
entities. You're right.
Yes,
Very
different entities. Yes, you are right.
I think yesterday something has come. That was sold in 5 different segments. The property will be sold under 5 different segments. It has come yesterday.
Yeah. But there will be a good scope for this sector companies, sir, because of the bank funding to this sector and the rapid pace which these companies are retail space is growing.
I think only few big players will be, left after this consolidation and takeovers.
Yes.
These small players will vanish over a period of time.
Yes.
I think you're on mute, ma'am.
No, the IPA team has called me and they want
Okay.
to start this session, the second session after some time.
Sure.
So on behalf of all the participants and ICC IIT, thank you very much, ma'am. The session was very informative and interactive. Now you have lunch break till 1:30.
Is it lunchtime?
Yes, sir.
Okay.
Next section will start at 1:30.
हाँ ले ले चार्जर फोन का ले ले चार्ज कर देना जब तक ये ना आए.
Okay. Thank you.
We'll drop off, ma'am. Thank you.
I thank you. I thanks all the participants and fellow insolvency professionals and seniors. And thank you for your patience listening. I was very quick in completing my PPT and I have taken up the question. I'll get back to you and thank you IPA team for giving this opportunity. Thank you.
Thank you, ma'am. It was a very good presentation.
Shall we start, sir?
Yes, we can start. Yeah.
Okay. Good afternoon, everyone. Now the session will be taken by Partha Kamal Sen, sir. Let me briefly introduce Partha, sir. Partha Kamal Sen, sir, is insolvency professional, company secretary, and fellow member of ICAI. He has done his certificate course on commercial mediation from Chartered Institute of Arbitration, UK, and Simon's Advanced Management Development Program from University of Australia. Sir is having more than 35 years of experience in corporate, legal, accounts, finance, audit, risk and claim management, credit control, etc. Sir has worked with Simon's, Phoenix, subsidiary of Continental AZ, and Price Waterhouse. Now, sir, you can start the session, please.
Okay. I'm audible. Hello.
Yes, sir, you are audible.
Yeah, you can hear me. No. Okay. So thank you. At the outset, I thank ICSI IIP for this opportunity to speak in this webinar. I also thank all the participants. I think the total participant is 48 numbers, a good number. So discussion subject is insights on wholesale and retail trade sectors under IBC. So you already have the first session on this, and this is the second session I am starting. Third one slide, I'm on PPT for you, and let me share that. Is it visible? Hello, can you see it?
Yes, sir.
Yes, sir. Yes, sir. Yes, sir.
Okay, just a minute. This is really. Okay. So to start with, there are some disclaimers from my side. Firstly, I want to tell you that the content of these articles is intended to provide a general view to the subject matter, and the views expressed are purely of the of mine. I mean, of the presenter. Secondly, no reference should be made from here in respect of any matter and for any judicial proceedings. And specialist, you must take the specialist advice if the circumstances so arise. Because I mean, maybe the things will differ from case to case. And thirdly, the interpretation made in this purely the personal interpretation of the presenter, that is mine. The same may be interpreted differently by any person in any other way. So with this disclaimer, let me start my presentation. Firstly, ICSI IIP has given the broad outlines of this session to me. And based on that broad outline, I have decided about the topics which we will discuss. Firstly, we will discuss the concept of wholesale trade. And firstly, I want to tell you one thing, that entire discussion for this webinar will be restricted with reference to our country, IBC, and with respect to India. Okay. So concept of wholesale and retail trade we will first discuss. Then we will briefly discuss what is the difference between wholesale and retail trade. Then Indian retail and wholesale markets will discuss. Then we'll come to we'll discuss. We'll see who are the biggest companies in this sector in India, and then we'll come to IBC domain. We'll discuss some case laws, some ideas reflected in the case laws will also be discussed. Then we'll discuss the provisions of power and duties for IRP/RP under IBC. Then our topic will be issues and challenges faced in handling this type of assignments. I mean, assignments in the retail and wholesale sector. Then the way forward, what we expect, and maybe last 15-20 minutes we can keep for question and answer session. Friends, I have attended one seminar. The seminar was on how to write a book. And there one speaker very nicely said that don't wait to be an expert and then write a book. Rather, you write a book, then it will be discussed and you will become an expert through the discussion. So friend, I also want the same thing. I have prepared this presentation. I will submit this thing before you. Let me have a thorough discussion. Maybe somebody of you may have more knowledge than me. So I can also, increase my knowledge through this discussion. But another request, don't wait for the Q&A session. If you have any question in between, please ask. So with this, let's start our discussion. First, as I said, we'll see the concept of wholesale and retail trade in India. The wholesale or the wholesalers are the companies are companies that sell goods or services to other businesses rather than the end user. Friends, you can see that some lines I have underlined. So, because I want to put emphasis on this, here the wholesalers, the indicator for a wholesale business is they don't sell the goods or services to the end user. For example, a company that sells fruits and vegetables to different stores in the area is a wholesaler. Most of the wholesalers, what's happening? They sell the bulk products at a lower price and offer the buyers of this product discounts the more they purchase. A wholesaler may simply sell goods to another company for direct sales to consumers. They don't themselves sell it to the end user, because have you heard the name of the company, Pushtik Ahar? They are the growers of the organic food. So they grow food, vegetables, all these things, and they supply it to the different companies, which you can say retailer. And when they sell it to them, they give the discount so that retailers can make profit, and through retailer it comes to the end user, to us, the ultimate customers. So the wholesalers may simply sell goods to another company or direct sales to consumers, or the wholesaler may be the manufacturer of goods up for sale. We have seen the distributors of the trade company. Trade companies are manufacturers, but at the same time they are the wholesaler. You cannot go to Seat company and purchase tire for your car, because Seat is a manufacturer. Also, Seat wholesale in the sense that Seat will supply these tires to the distributors, from where the end user, the end user can purchase the requirement. The car tires for their car. So the wholesaler may also manufacture the goods up for sale. The retailer, similarly, retailer refers to a sale of goods or services in a way that end users directly receive from them. So difference that not end user, but here the end user directly get the product from the retailer. For example, a departmental store. Here customers, the end users can enter the stores and purchase goods directly in that store without relying on a third party. Therefore, a retail business is one that distributes the final products directly to the customers. Generally, retail business sell in small number of goods or services in comparison to the wholesale companies. Obviously, since it is for the individual customer, they are not the supplier of the bulk product like the wholesaler. Okay. Now, after reading all these things, now what are the differences we can have I mean, we have in these two business. Firstly, the key difference between the wholesale and retail is who purchases the goods up for sale. In a retail setting, the end user or customer is purchasing the goods or products directly from retail store, but a wholesaler sells goods to other stores in the retail sector rather than the end consumer. Therefore, the retailers are B2C, business to consumer entities, because from there it comes to the consumer, ultimate end user. This means the products offered by the retailers are directly available for purchase by the consumers. But the wholesalers are B2B, business to business entities. This means wholesaler sells goods to another business rather than to a single consumer. So if it is so, then what's happening? The establishment cost, you can understand the establishment cost, legal cost, employee cost are much higher in retail sector, whereas the investment of fund is higher in wholesale sector. We will come in detail when we will discuss the issues and challenges in this sector. Okay, but you can understand this. Established cost, wholesaler maybe have one unit to sell its product, but retailer has different units. The establishment obviously higher there in the retail business. Also the employee cost, the number of employees are much higher more in the retail business. The inventory control and logistics are critical in retail sector as compared to the wholesale sector. It is also understood, very much understood, because of the dispersion of the various units of the retail business for their activities. Now we will see something, about the Indian context. The Indian retail and wholesale market is estimated to grow in the coming years, supported by the increase in consumer confidence and expenditure. Friends, here I can share one personal experience with you. You know what's happening. One of my friends, he is from the business community, and it is the incidents of 10-15 years back. Yeah, 10-15 years back, when the internet just come to us. We have the access to the internet, all these things. So what's happened? My friend had a brilliant idea. He wanted to sell. They have the shari. Garment business. They sell sharis. You know the sharis, no? They are traditional dress material for the Indian ladies. So my friend wanted to sell sharis through internet. So he asked his wife, this is my idea. What do you feel that, the success of my venture? So his wife said, are you crazy? He said, why? He said that, she said that we girls, unless until we touch the shadi, touch the material, see the material by your own eyes, ask 100 questions to the shopkeepers, and after having the intense bargaining, then only we will purchase the shari from the shop. So who will purchase your shari from the network, internet? So maybe I don't know exactly, but maybe my son dropped that, my friend dropped that idea. But now what's happening? Most of the retail thing markets we will get from the net only, apps only. So the growth in the wholesale and retail market in India now increased many times because of the consumer confidence, and also the capacity to spend has increased for the Indian population. What that lady said, that unless until you have an intense bargaining with the shopkeeper, we don't purchase. I think that is not applicable nowadays. Maybe the app which sell these things, they put their price, very justified price, but that bargaining is no more there, isn't it? So the Indian retail wholesale market, and it is expected also this growth will be there. This market is witnessing a paradigm shift propelled by liberalization, yes, modernization, definitely yes, and rapid adoption of digital technologies, which we just discussed. Over 2020 to 2025, the retail and wholesale industry in India is forecasted to expand at an 11% CAGR, cumulative average growth rate. So the experts say that over 2020 and to 2025, it will increase by 11% CAGR. Both this retail and wholesale sector in India. The retail sector is fragmented with small stores accounting for majority of sales. The organized retail sector is growing, but still accounts for a small portion of total retail sales. Yeah, the study says that. We'll see also. As per industry report, India's retail market size is pegged at $822 billion, of which organized segment, excluding e-commerce, accounts for about 11% of the overall retail market as of financial year 2019. And this share is expected to increase to 16% over next 5-6 years, with the organized retail market growing at a CAGR of 20%. So this is the Indian scenario. We have more. There are two main types of retailers in India. One is Kirana and other is modern stores. Actually, I don't know the average age of the participants for this webinar, but during my boy days, I used to purchase goods from the local Kirana shop. We call it in Bengali, we call it Parar Mudid Dukan. And that is the primitive stage of the retail business in India. Not primitive, because I think in the rural or village area, we'll also find the Kirana shops. Then the modern stores, which we have. The Kirana are small family-run business that make up majority of retail outlets in India. Modern stores include supermarkets and convenience stores. I mean, you know, the shopping malls, all these things. There are also the retail business are there, shops are there, but they are the modern stores, unlike the Kirana. Just a minute, please. Just a minute. Sorry. The wholesale segment, the wholesale segment is also growing in India. It is expected that this segment will continue to grow in the future too, though the competition in this segment is extremely high. The sudden, friend, here, one thing I want to mention, that COVID-19, the sudden outbreak of COVID-19 pandemic had significantly disrupted the retail and wholesale sector in India, not only in India, all over the world. There was a huge decline in supply chain that led the decline in this market. The market faced various challenges that restrained its growth. The market is now recovering from the impact, as you have seen already, of pandemic, it is estimated that this sector will grow more in the years to come. It is estimated that there will be a huge growth of retail and wholesale sector in India. So friend, though it is not under our subject, but I have given this info. This I have given. I am showing this slide as a information to you. Also, you know, just I mean, few slides back we have discussed that organized sectors for retail, the percentage of organized sector in retail business is much less than the organized sector. One main reason, friend, is that, you know, what's happening. I mean, if you mostly the retail business is done by the small companies, proprietorship, and so far MSME registration is only available for the manufacturing and service industry, I mean sector, not for the trading sector. That's why the organized sector means, I mean, the establishment, the entities registered under any act of India, Companies Act, LLP, Partnership Act, Proprietorship Act, like that. So if the entity, the establishment is registered, then we call it as an organized sector. So the main reason is that trading business was left out for being registered under MSME. But the Ministry of MSME has announced under its revised guidelines number 5/2/2021 EPG policy, blah blah, dated 2/7/21, the inclusion of retail and wholesale trade as MSME and extending to them the benefits of priority sector lending under RBI guidelines. Now, friend, I think we will see the more organized sector will come under retail business because of the circular of the government. It is also the intention of the government to bring more, to have the business from more organized sector than unorganized sector. Organized sector, if had it been from the organized sector, it is, I mean, easier for the government to frame policies, easier for the government to provide benefits to the activities of that sector. Apart from access to the priority sector loan from banks, retail and wholesale trade enterprises can also take advantages of other MSME scheme for other scheme for MSMEs. Hence, the insolvency resolution procedures under IBC is applicable for MSME will also be now applicable for retail and wholesale trade sector enterprises. And this is very important. I think all of you know about section 29A, where it is said that promoter of a MSME enterprise can submit resolution plan, even though that organization is considered as NPA. So when now if the retail and wholesale trade business comes under the MSME, the promoter of the business, they are now entitled to submit the resolution plan for their own business which has gone to CIRP. This is I think the huge benefit given to this retail and wholesale sector. Now we'll see some name of the big companies in these sectors. The wholesale and retail sectors in India are booming, and as we have already discussed, and the best companies in India list featured some of the most renowned companies. This is very important, friends. I mean, some of the very important companies who have the more turnover in the stock exchanges, they are at the retail and wholesale sector. For example, to name the first is the ITC Limited. ITC Limited has made a mark in the Indian food wholesale sector with its foray into the food business beginning in August 2001 with the introduction of Kitchens of India ready-to-eat Indian government dishes. With its convenient export capabilities, the food industry in India is expected to grow rapidly in coming years. Then is Adani Wilmar. It is a leading manufacturer and marketer of edible oil, rice, flour, and other food products in India. It is a joint venture between the Adani Group and Wilmar International Limited, one of Asia's largest agribusiness company. Adani Wilmar is known for its popular brands such as Fortune, Kings, and Rag. The company has a strong presence in retail market through its distribution network and partnership with leading retailers because they are the wholesaler. In addition to its retail operation, Adani Wilmar also has a significant presence in B2B segment, supplying its product to food processors, institutional customers, and other businesses. With a focus on quality, innovation, and sustainability, it has established itself as a trusted name in the food industry in India. So the next name we can take is Metro Cash and Carry. I think you heard about them. It is a German conglomerate but they have the Indian presence in the wholesale market. For the retail sector, we can name the Reliance Retail. Reliance is the retail arm of Reliance Industries Limited, India's largest conglomerate. Reliance is the largest conglomerate in India. Founded in 2006, Reliance Retail is one of the India's leading retail companies with over 11,000 stores across 6,700 cities and towns. The company offers a wide range of products, including food and groceries, fashion and lifestyle, consumer electronics, and home and office products. All these are under the umbrella of Reliance Retail. And they sell directly to the end users. With its omni-channel approach, Reliance Retail is committed to providing the best shopping experience to customers. The company's digital initiatives such as JioMart provide an easy and convenient way for customers to shop from the comfort of their homes. B2B business, B2C business. Then we can name Aditya Birla Fashion and Retail Limited. It is one of India's leading fashion lifestyle entities. ABFRL is formed in May 2016 after the consolidation of the retail business of two of India's largest business houses, the Aditya Birla Group and the Piramal Group. The company operates a portfolio of brands that aim to provide the latest fashion trends to customers from all walks of life. ABFRL has the impressive list of brands under the umbrella, including popular names such as Louis Phillips, Venetian, Peter England, Allen Solly, etc. Then we can we have the name of Shoppers Stop. Is an Indian retail chain of department stores founded by K. Raheja Group Corporation in 1991. It offers a wide selection of apparel, footwear, cosmetics, and home products from top international and domestic brands. And the other is Fab India. It's a popular Indian retail brand that has been promoting traditional Indian handicrafts. I think you heard the name of Fab India. And textile since its inception in 1960. The company has established a reputation for its high quality products and socially responsible business practices, which have helped to support rural artisans and preserve traditional crafts. So this is the list for the wholesale entities and retail entities in India. So friends, so far we have discussed the concept of the wholesale and retail trade, the difference between these two. Also, we have seen that we have that information that MSME now, the retail and wholesale trade will be covered under MSME, and also we have seen the list of the biggest companies in this sector. So, do you have any questions? Any question you have?
We may add in this chain, we may add Avenue Supermart having brand name
Hello?
DMart and Patanjali Group also.
Sorry? Hello?
We may add in this group Avenue Supermart having brand name of DMart.
Yeah, of course,
Patanjali.
of course. Yeah. There are so many things.
Patanjali.
Patanjali, I mean, yeah, it is there, but I think their brand name is Gucci. No, Gucci is the name of the Patanjali, isn't it? Hello? I'm audible. Hello?
Sir, yes, sir.
So yes, of course, you are absolutely right. I have given some of the names. There are lots of friends. I have already told you that it is a booming sector for India. We'll also see in the subsequent slides, I mean, how this sector features in Indian economy. So this is only the name of some of them. Okay. So any other question?
No, sir.
Anyone? I don't know. So no question. Okay, then we'll move to the next. Now we'll discuss certain case laws in this sector pertaining to this sector. But these are not the case laws. These are not the company petition. Rather, these are the case laws I have taken, which has appeared during the hearing of the company petition. Interlocutory application. I think you know about it. Interlocutory application. First, the company filed their petition, and during the hearing, in the course of hearing, other party can file the application or petition, which is called related to the original application. It is called interlocutory application. So all these are interlocutory application, but these decide some issues which I think is very important, not only for this retail or wholesale sector, but for all the sectors. Okay. So the first case I have chosen is the Nike India Private Limited versus NK Brand Distributions Private Limited. Friends, if you have any question, please ask me in between. Okay. We have the question answer section, but even then. So here you see the company Apple 80 insolvency number is 249 of 2023 and interlocutory application number 886 of 2023, and it is heard in Enclave, New Delhi. It is an Apple. And the Nike India is in the industry segment of wholesale distribution. Okay. So what is the fact? The fact is that an appeal filed by Messrs. Nike India Private Limited before Honorable Enclave, New Delhi against the order dated 22/12/2022, by which the Section 9 application filed by the appellant to initiate insolvency proceedings against one of his distributors was dismissed on the ground of pre-existing dispute. They filed their Section 9. Nike India Private Limited was the operational creditor. They filed their Section 9 application against the corporate debtor, NK Brand Distribution, Private Limited, but that application was dismissed by the NCLT on the ground pre-existing dispute. You know what's happening? The Section 8 notice was issued on 6/11/2020 for an amount of 3.15 crores, and the corporate debtor submitted a reply on 15/11/2020 within 10 days to the said notice, disputing the claim and raising various claims against the operational creditor, the appellant, that is Nike. Reply to Section 9 application was also filed. The adjudicating authority, after noticing the judgment of Honorable Supreme Court in Mobilox Innovation Private Limited versus Kimsa Software Private Limited, they have rejected, they have dismissed the appeal. The appellant counsel, that is Nike's counsel, argued that the pre-existing dispute, as was raised by the corporate debtor in reply to Section 8 notice, was a moonshine defense or dispute. It is very important. We'll discuss these things. In the distributorship agreement between the parties, there was no liability which could have been fastened on the ground of sale on a lower price by the corporate debtor, and further, under the agreement between the parties, no claim could have been raised. So though the NCLT, though the council argued that this is not a valid dispute or moonshine dispute, NCLT didn't agree and the NCLT dismissed. So Nike filed the appeal before NCLAT. Now what's happening? What is the observation of NCLAT? NCLAT observed that as per the reply under Section 8, which had been made and annexed to the appeal, when Nike filed the appeal, Nike also attached the reply which is given by the NK bank. The corporate debtor has specifically denied the claim of the appellant and raised various claims totaling 3.45 crore on account of non-reimbursement of its claim of GST in full on the closing stock, additional discount as per the addendum to the agreement for the MRP and invoice value, and defective stocks lying at the end. So these are the things. They admitted that claim, but they said they also raised the counter claim or raised the disputes on account of these points. That non-full refund of entire GST, then there are lying some defective stocks, no additional discount was given, all these things. So NCLT observed, thus NCLAT observed that the reply to Section 8 notice raised issues pertaining to pre-existing dispute between the parties, and NCLAT not satisfied with the submission of the appellant that dispute is a moonshine dispute. That means what the NCLT, passed the order, for which the NCLT passed the order, NCLAT also upheld the same. So NCLAT opined that admittedly the distributorship agreement between the parties was not disputed, and the appellant has claimed against the but the present, this appeal is not a case where Section 9 proceedings under court can be initiated. Friends, here I think here there is a point, if you see the objective of the IBC, is for the revival, resolution of the corporate debtor. IBC has not been paying for the recovery of your dues. The disputes, the NCLT has no jurisdiction to adjudicate on the disputes between the parties. Okay. So NCLT said that Nike can take the recourse because NK Bank didn't object for the distributorship agreement. They also didn't, argue or they didn't deny the amount claimed by the Nike. What they said, they raised the dispute against the claim of Nike. And as such, this application is not fit for an application of under IBC. So NCLAT upheld the order NCLT and dismissed. Clear? Any question you have? Now, friend, here two things has emerged. One is this moonshine defense or dispute, and another thing on which NCLT based its judgment is the Mobilux Innovations Private Limited and Curusa Software Private Limited. I am sure that all of you have heard these things, are aware of these things, gone through these things, but even at the cost of repetition, for our better understanding of the subject, I want to very briefly, I want to discuss the matter once again here. You know, Mobilux versus Curusa, Supreme Court interprets existence of disputes as per IBC. This is definitely one of the landmark judgments of IBC, of Supreme Court and IBC. But I think this is the first judgment of Supreme Court in under IBC where the apex court has interpreted a term used in the code. This is the first case decision given by the apex court. Before that, I think another landmark that is innovative versus ICICI Bank, but there is no interpretation of the term used in IBC. There the Supreme Court has given verdict whether the state laws or central laws will prevail like that. But in Mobilux, interpretation of the term used in IBC is done for the first time by the Supreme Court. So the Supreme Court in Mobilux Innovations Private Limited versus Curusa Software Private Limited settled the widely debated question of what constitutes the existence of a dispute. This is clarified by the apex court in the context of applications filed by the operational creditors for initiation of corporate insolvency resolution process of corporate debtor under IBC. So if you see the very short, precisely, briefly the fact is the case is the Mobilux engaged Curusa for providing various services in relation to conduct of televoting for a TV program. The parties also executed a non-disclosure agreement under which Curusa had certain confidentiality obligations toward Mobilux. Curusa raised monthly invoices on Mobilux for services provided. However, Mobilux informed Curusa that payments against such invoices were being withheld due to breach of NDA by Curusa. This is the existence of dispute. Mobilux never said that no, your claim is not, as per the order. Mobilux said, yes, your claim is as per the order, but there is a dispute between us. You have violated, you have breached the conditions of NDA which we had. Curusa sent a demand notice to Mobilux, so definitely, as the payment is due, Curusa sent a demand notice to Mobilux under Section 8(1) of IBC. Mobilux responded to demand notice stating the inter alia that there was existence of serious and bona fide dispute between the parties, including breach of NDA by Curusa, which was already brought to Curusa's notice long back. Subsequently, what's happened? Kirusa filed an application before NCLT Mumbai for initiation of CIRP of Mobilux. Now, if you, NCLT, then it also gone to NCLT also. So if you see the orders of NCLT and NCLT, briefly, NCLT Mumbai dismissed Kirusa's application on the ground that Mobilux replied to the Section 8 notice mentioning the existence of dispute, which we have already read. An appeal against NCLT order filed by Kirusa, National Company Law Tribunal. NCLAD allowed Kirusa's appeal on the ground that Mobilux reply to the demand notice did not raise a dispute within the meaning of Section 5(6) or Section 8(2) of IBC, and that the defense raised by the Mobilux was vague, got up, and motivated. Incidentally, this was the first NCLAD ruling on the question of what constitutes dispute and existence of a dispute under IBC. So, though NCLT said no, there is an existence of dispute, NCLAD said that, look, this dispute is not within the meaning of Section 5(6) or 8(2) of IBC, and according to NCLAD, it is vague and motivated. Which of India is, according to NCLAD, is a motivated dispute. And you know what's happened in NCLAD? This is the first time NCLAD also judging the existence of dispute under IBC. So NCLAD dismissed the order of NCLT and appeal the appeal filed by Kirusa. So Mobilux gone to Supreme Court against the order of NCLAD. Now this is very important. Now Supreme Court said, interpreting the expression existence of a dispute occurring under Section 8(2)(a) of IBC, the Supreme Court allowed Mobilux appeal, holding that there was a dispute in existence which was sufficient to defeat the CIRP application filed by Kirusa. When this bullet is very important, I think you also you know about it. The high point of the Supreme Court ruling is that the word and, if you see Section 8(2)(a), just a minute. Section 8(2)(a) said that existence of a dispute, if any, or record of the pendency of the suit or arbitration proceedings. This is 8(2)(a) of IBC said. But Supreme Court interpreted that this or should be read as and. Both are inclusive. A dispute may be there, or there is a suit or an arbitration proceedings. Both are independent, not complementary to each other. So Supreme Court ruling is that the word and occurring in Section 8(2)(a) of the IBC must be read as or, and this makes all the differences. When after these things, you know that code has been changed. I think you are aware of this. With effect from 6/6/2018, the code changed, and the Section 8(2)(a) now incorporate the word or, not and. The and is substituted by the word or. The issue really was that the word and in Section 8(2)(a) of IBC suggests that a dispute between the operational creditor and the corporate debtor will be in existence only if a suit or an arbitration proceedings on the dispute is pending before receipt of demand notice. So Supreme Court said, no, it is not the case. To highlight the hardship, the Supreme Court cited an example that in case of dispute that arises a few days before triggering the CIRP, there would be no time to approach either an arbitral tribunal or a court, even though a dispute may exist. The Supreme Court said if this word and, we have to consider that word will be and. So it may so happen that this dispute arises only few days back. The application for CRP has been filed. So there is hardly any time to go to court or arbitration. So Supreme Court said that this and will be read as or. Pertinently, the Supreme Court takes note of the fact that law permits the long limitation periods, where even though disputes arise, they do not culminate into a dispute or arbitration proceedings for up to 3 years, because limitation period is 3 years. So how can you say that? I mean, if it is happening, I mean, few days back, how can you say that the corporator has to file the suit or arbitration? The Supreme Court reviews the entire scheme relating to CIP applications filed by the operation creditors and holds that what is important is the existence of the dispute and or suit or arbitration proceedings must be pre-existing, that is, must exist before receipt of the demand notice. The Supreme Court holds that while determining existence of a dispute, all that the NCLT is to see is whether there is a plausible contention which requires further investigation, and that the dispute is not a patently feeble legal argument or an assertion of fact unsupported by evidence. I think it is clear, no? The existence of dispute, when NCLT will judge, that authority, that adjudicating authority has to satisfy that it is not a feeble legal argument or any unsupported evidence, no matter whether any suit is filed or not. While opining that a superior defense which is mere bluster should be rejected. The Supreme Court adds a word of caution. While determining whether dispute exists or not, NCLT is not required to satisfy itself that the defense is likely to succeed or to examine the merits of the dispute. That's why we have discussed, right? It is not under the purview of NCLT to adjudicate the dispute. It is the duty. It is within the scope of NCLT to see where there is a, genuine dispute exists in the process against the CRP claim application. So long as the dispute truly exists in fact and is not spurious, hypothetical or illusory, the application of the operational creditor must be rejected by NCLT. So if it is not spurious, hypothetical, NCLT must reject the application under section 9. One of the arguments advanced by Kiriza was that dispute between the parties must relate to one of the 3 sub-clauses mentioned in section 5(6) of IBC. That is, it must relate to the existence of the amount of debt, the quality of goods and services, or breach of a representation or warranty. This contention was rejected by Supreme Court on the basis that definition of dispute was an inclusive one, and that the present case was not one where a suit or arbitration proceedings had been filed before the receipt of demand notice, only in which case the dispute must relate to the 3 sub-clauses of section 5(6). Section 5(6) will attract only when, if the dispute is, the necessary application is filed, the necessary suit is established, or necessary suit is initiated against the claim. But otherwise, the dispute doesn't require the fulfillment of the conditions when specified in section 5(6) of IBC. So this is the Supreme Court judgment, and Supreme Court definitely they dismiss the order of enclave and uphold the order passed by NCLT. Now, friend, we'll discuss the moonshine, because in that case which we have discussed, Nike case, there is another very important aspect we have seen: moonshine defense or dispute. You know the importance of this thing, the dispute, the existence of dispute. Why the importance for determining the existence of a dispute? If you see the section 8 of IBC, insolvency resolution by the operational creditor, section 8.1 said an operational creditor may, on occurrence of a default, deliver a demand notice of unpaid operational debt or copy of an invoice demanding payment of amount involved in the default to the corporate debtor in such form and manner as may be prescribed. 2 said the corporate debtor shall, within a period of 10 days of receipt of the demand notice or copy of the invoice mentioned in subsection 1, bring to the notice of the operational creditor who has submitted, given the legal notice, that existence of a dispute, if any, or record of pendency of the suit or arbitration proceedings filed before the receipt of such notice or invoice in relation to such dispute. The corporate debtor has to satisfy the operational creditor that there is an existence of a dispute or there is a suit pending before the court or the arbitration proceeding, or be the payment, or be the payment of unpaid operational debt has been made by sending the attested copy of record of electronic transfers or unpaid amount from the bank account to the corporate debtor, or by sending the attested copy of record that the operational creditor has encashed a check issued by the corporate debtor. Explanation said that for the purposes of this section, a demand notice means a notice served by an operational creditor to the corporate debtor demanding payment of the operational debt in respect of which the default has occurred. So section 8 said that when an operational creditor issue the legal notice to the corporate debtor, within 10 days the corporate debtor has to reply to that demand notice, mentioning inter alia that there is an existence of a dispute. Now, if you see the section 9 of IBC, it is application for initiation of CIRP by OC. 9A said that after the expiry of the period of 10 days from the date of delivery of notice or invoice demanding payment under subsection 1 of section 8, if the operational creditor does not receive payment from the corporate debtor or notice of dispute under subsection 2 of section 8, the operational creditor may file an application before the adjudicating authority for initiating the corporate insolvency resolution process. I have only highlighted those portions of the section which are relevant for our discussion. So 9.5 said the adjudicating authority shall, within 14 days of receipt of the application under section 2 by an order, admit the application and communicate such decision to the operational creditor and the corporate debtor if no notice is there. Actually, this is for mine. You know, friend, what is the importance of the existence of genuine notice? You know, the dictionary meaning of the word moonshine is the false or rubbish talk, idiotic talk. So moonshine dispute means the dispute which doesn't have any base. So what is the importance of a genuine dispute? Raising a genuine dispute by the corporate debtor, because section 9(5) said the adjudicating authority shall means there is no discretionary power in the hand of adjudicating authority. If the application is filed, if there is no dispute, adjudicating authority bound to admit the application. Whereas if you see section 7 says that is the application filed by the financial creditor. Section 7 said the adjudicating authority may, because there is a discretionary power given in the hands of the adjudicating authority. Adjudicating authority may or may not accept the application of the financial creditor. This is, friend, very much categorically mentioned by the Supreme Court, Honorable Supreme Court, in their decision in Vidarbha Industries versus Axis Bank. In Vidarbha Industries versus Axis Bank, Supreme Court categorically said, as per the provisions of IBC, where there is no discretionary power given to the adjudicating authority to admit the application filed by the operational creditor, but there is the discretionary power the adjudicating authority has while deciding upon the application filed by an financial creditor. So there is the importance of determining the existence of the dispute. It is, I think I am clear to you. So they reject the application of these things. So friends, I mean, I think that the subject which we have started with the Nike case, that Mobilex and the moonshine, I think it is now clarified. I mean, Supreme Court categorically said that the only thing the NCLT can see whether the dispute raised by the corporate debtors are genuine or not. Hello? Hello? Any question? Hello? May I request the participant to switch off their mic? Hello?
Yes, sir. Yes, sir. Audible.
Now, I request you to kindly switch off your who has opened his mic, because there's some disturbance. Hello? Can you please switch off your mic, please? So it is clear. Any question you have? Good. Acha. We have some other cases also in support of that Nike case. You know what happened? I also like to discuss another Supreme Court decision in SS Enterprise versus Hindustan Petroleum Corporation Limited. It is a very recent decision given by the Supreme Court. The date of judgment was 15th July 2022. In this case, Supreme Court deals with the issue of existence of a dispute. Again, it came to Supreme Court for its interpretation. Though it is interpreted Supreme Court, but you know that it is revolving. I mean, it is a very dynamic thing, IBC. All the words can be interpreted depending upon the case-to-case basis. The situation on a case-to-case basis. Okay. So again, this thing, SS Enterprise and Hindustan Petroleum Corporation came to Supreme Court on the issue existence of dispute. So what's happened? The Apex Court observed that when examining an application under Section 9 of IBC, the adjudicating authority would have to examine whether there is an operational. Okay, it is much. I think it is filed much before. That is then that's why it is said 1 lakh. It is not 1 crore. Whether there is an operational debt exceeding rupees 1 lakh. 2. Whether the evidence furnished with the application showed the debt was due and payable and had not till then been paid. And 3. Whether there was existence of any dispute between the parties or record or pendency of a suit or arbitration proceedings filed before the receipt of demand notice in relation to such dispute. So apex court said that these are the things one should see when the application filed. If any one of the aforesaid conditions was not fulfilled, the application of the OC would have to be rejected. Good. In the instant case, the correspondence between the parties showed that the respondent, that is Hindustan Petroleum, was disputing the claims of the appellant on the contention that the appellant was backing out from its commitments and not adhering to the time frame as per the contract, thereby causing losses to the respondent. Due to this, the respondent was constrained to procure materials from other vendors and had to incur losses. Hence, they declined to release money claimed by the appellant on the ground of poor quality of work and breaches of the terms and conditions of the purchase order. The apex court observed that the correspondences between the parties evidence the existence of real dispute. Going to the best test of existence of a dispute.
Sir, can I stop for a minute, sir?
Yes,
on a discussion, what are we to gather that under section 9, these moonshine disputes are to be excluded, or do they get excluded? And if so, how are we to establish that a dispute that is raised is a moonshine dispute?
That's something. When I think just a minute. If you see these things, the Supreme Court, what Supreme Court said, while determining the existence of a dispute, all that NCLT is to see that whether there is a plausible contention which requires further investigation and that the dispute is not a patently feeble legal argument or an assertion of fact unsupported by evidence.
That's right.
Get it? So these are very important. This is not for you. I mean, you can file you as the operational authority can file your application.
Okay.
But it is important for NCLT to see these things.
That's right.
NCLT may not see that whether you have filed the suit or not. No, it is not the duty. NCLT, it is not the duty of NCLT to adjust the dispute. No, this is not a dispute, all this. NCLT cannot do that.
That's right.
NCLT only see that it is not a feeble legal argument or whether the supporting documents are given in support of the dispute. Whether it will, it will be accepted in the court of law, that is different.
Can we say that prima facie acceptable? Is it so?
Yeah, of course, yes. Prima facie acceptable based on the evidence.
That's right. That's right, sir.
Okay, without going deep into that.
That's right.
Without going deep into that.
Okay. No roving inquiry, so to say, but
absolutely,
only.
Absolutely.
Yeah.
Absolutely,
Okay.
absolutely.
Okay. Thank you so much.
So going by the test of existence of dispute, I look why I am taking all these case laws, because these are all similar. But more we see the case laws on this subject, existence of dispute, when the things we will face the things, it will be much clear to us now. It will our mind will be much clear. We can also, if we have to argue before the NCLT, we can also argue with the reference of all these case laws.
You said it, sir. Sincerely, though this moblocks and all we had come across so many times over. Actually, this particular thing, at least for me, it did not get registered, this moonshine aspect as such. And to that extent, what you said is exactly correct. Thank you.
So going by the test of existence of a dispute, it was clear that the respondent had raised a plausible defense. There was no amount of outstanding to the appellant. Rather, there was a recovery due from the appellant. The apex court found that there was a pre-existing dispute that with regard to the alleged claim of the appellant. It was not for the adjudicating authority, NCLT, to make a detailed examination of respective contentions and adjudicate the merits of the dispute at this stage. The apex court said. Apex court said, look, we have seen that there is some dispute. They said that they didn't supply the material in time. They said the quality of the goods are poor, and that's why they withheld the money. The apex court advised the NCLT that it is that you need not to make any detailed examination of the respective contentions, what both the parties said, but we have to see whether there is really an existence of dispute. The apex court also remarked that the NCLT, while exercising powers under Section 7 or Section 9 of IBC, is not a debt collection forum. It is very important. If you see the objective, it is categorically said that IBC is not a debt collection forum. IBC is only for the result. Though, I mean, we very loosely said that whenever some amount is pending, we said, okay, file application on IBC. But one thing we really forget, that the intention of bringing out IBC is not for the debt collection. It is to see whether the financial strength of the corporate debtor, the root cause analysis for the corporate debtor, to revive the corporate debtor. That's why, you know what's happening under IBC, it is the creditor control is introduced. Not that, I mean, the same promoter carry on his business, like the other insolvency laws which we had prior to IBC. Prior to IBC, what's happening? The same promoter continue his business and the case is going on for the recovery of the debt. But IBC said no. Let the creditor take the control, let the third party, RP or IRP, take the control of the business, and you see whether there is a possibility to revive this company. What is and how it is? It triggers by the application filed under Section 7 and 9. So if there is a possibility to revive the company, let it be revived. Otherwise, go for liquidation. The apex could also remark that the NCLT, while exercising powers under Section 7 or 9, is not a debt collection forum. It is not object of the IBC that CIRP should be initiated to penalize the solvent companies for non-payment of disputed dues claimed by an OC. You know, I forget the case title. I forget, but you know, there is a decision of the Supreme Court. What's happening? The company. I think it is not Bidar. I think it is Bidar. Yeah. The company, okay, Section 7 application filed against that company's corporate debtor for non-payment of dues. But the company is really a solvent company. Company has so many receivables from the government. The only thing is that the company is unable to collect the dues from the government in time, and that's why unable to pay its debts. So Supreme Court says no, we cannot admit the CIRP application against this company, because this company by nature is financial solvent. There is no need for revival of this company. The specific situation debarred the company for payment its dues. And that is the real object of IBC. It was patently clear that an OC can only trigger the CIRP process when there is an undisputed debt and a default in payment thereof. However, if the debt is disputed, the application of the OC for initiation of CIRP must be dismissed. The NCLT committed a grave error because the NCLT admitted in SS Enterprise, the NCLT admitted the case. Committed a grave error of law by admitting the application of OC despite a pre-existing dispute. The NCLAT rightly allowed the appeal filed on behalf of the respondent. The apex court found no ground on interfere with the judgment of NCLAT and dismissed the appeal. There is another order which is pronounced on 2nd March 2023. It is given by the National Company Law Tribunal, Jaipur bench. Well, adjudicating an application under Section 9 of IBC in the matter of Narayan Organics Private Limited versus Royak Polytech Private Limited, the bench held that an application under Section 9 IBC must stand the test laid down by the Honorable Supreme Court in SS Engineers versus Hindustan Petroleum Corporation Limited, which we have just discussed. The Honorable Jaipur bench also mentioned the same thing. The reference, drawn the reference from this case of Supreme Court and dismissed the application. In this matter, OC Narayan Organic Limited supplied goods to OCD, Royak Polytech Private Limited against the purchase order issued to them. The CD failed to make payment of outstanding invoices of from 29/5/2017 to 27/9/2018, amounting to rupees 8. This is also prior. 87 lakhs and debit note of bank interest of 3 lakhs. From 2/6/17 to 25/12/17, it was submitted that city was also liable to pay interest amounted to 7.31 lakhs, 18% bond under the concern. The given notice was issued by email and the city replied to the notice on but did not allege any substantial objection. On the contrary, city alleges the OC did not approve the tribunal with the clean hands. You know what's happened when the demand notice mentioned raised by the OC on 24/19, CD replied the notice but didn't allegedly raise any substantial obligations. On the contrary, CD only alleged that OC did not approach the tribunal with clean hands and has concealed material information. It was submitted that purchase order does not bear the signatures of the CD and there is neither any proof of delivery of goods nor any acknowledgement of a debt. The corporator further alleged that there is a dispute in the meaning of Section 56B and 82A of IBC regarding the quality of goods supplied. Friends, one thing is clear, you know, if you see that the dispute with supportive evidence, it need not to be for the amount which is claimed. The dispute can be for other matters also. The corporate debtor or the other party can raise the dispute for other matter also, but related to that action, related to pertaining to that thing. Not only for the amount, but pertaining to that activities of the operational or financial creditor. Am I clear? You not necessarily raise dispute against the claimed amount, but you can raise dispute against anything related to that activity of the creditor, operational or financial. That will be addressed as the dispute, existence of the dispute. Okay. CD further alleges that there was a dispute within the meaning of IBC regarding the quality of goods supply, which are significantly different. So the supply and tender, they also rejected 2 debit notes. Then inferior quality of goods. Did not raise any issues regarding the quality of goods before the issuance. So here what's happened? They subsequently, at the time of hearing, the CD raised this question that OC said that rejoinder, you know, the rejoinder, when the application is filed, the other party filed the rejoinder to the the document filed by the opponent. So here the OC in its rejoinder reverted the claim by submitting by the CD did not raise the issues regarding the quality of goods before issuance of demand notice. No steps have been taken by the CD to return the goods fielded. The emails attached to CD were 15 to 16, whereas the default was committed between 17 and 18. This is observations of tribunal. Observation of tribunal. The tribunal observed that the word dispute under IBC includes a suit or arbitration proceedings relating to the existence of amount of debt, the quality of goods or services, or the breach of a representation or warranty. The tribunal relied on the judgment of Honorable Supreme Court on Mobilux Innovative Private Limited and Kirusa Software Private Limited, which states that the dispute must not be a patently feeble argument or an assertion of fact unsupported by evidence. The tribunal further held that dispute must fit within the parameters as defined under IBC, but at the same time, it must stand the test laid down by the Supreme Court in Messrs. SS Engineers versus Hindustan Petroleum Corporation Limited and others, whereby it was held that operational creditors can only trigger corporate insolvency resolution process when there is an undisputed debt and a default in payment thereof. The tribunal observed that in the present case, multiple emails have been sent which make it clear that there was an existence of pre-existing dispute between the parties. Hence, the conditions of Section 9 are not fulfilled. With the said observations, tribunal dismissed the petition. So again, friend, at the cost of repetition, I say that dispute, pre-existing dispute need not to be related to the amount claimed. The pre-existing dispute can be for any other matter, but pertaining to the activities between these two parties. Am I clear to you? If this happens, then NCLT shall reject the application filed under Section 9 of IBC. Now we come to the next case laws. I mean, again, it is not the company application. I have picked up something which arise during the course of hearing, interlocutory applications. You know, here the interlocutory application, it is, the case is Mr. Anil Goel, the liquidator in the matter of Messrs. Rotomac Global Private Limited versus Mr. Ramanjit Kaur Shetty, Deputy Director, Directorate of Enforcement. It is very, I think, have you ever faced any situations where the property of the corporators is attached by the Directorate of Enforcement? Have you handled any assignment? Hello? Anybody has any experience? So here what's happened, you know, the fact is that the CD had a total outstanding of rupees 2,000. Total outstanding of rupees 2,919 against a consortium of 7 banks led by Bank of India. The application was filed under Section 7 of IBC against the CD, and the same was admitted by NCLT Allahabad bench by the order dated 29/2017, and the RP was appointed. As there was no resolution of the CD, the RP filed the application under Section 33(1)(a) for the liquidation of CD. The application was admitted, and the RP was appointed as the liquidator. So far, so good. Now, what's happened? However, so the liquidation started. However, the Directorate of Enforcement of Delhi Zonal Office started investigation for commissioning of offence under Section 3 of Prevention of Money Laundering Act 2002, punishable under Section 4 of the said Act on the basis of information and material from CBI. CBI had the information that this party, Docomac, they have defrauded one of the banks because it is a syndicate. It is a syndicate of banks. Huh? So one of the banks, Indian Overseas Bank, to the tune of 756 crore rupees by providing them the false export bills, because that bank, Indian Overseas Bank, provided them the bill discounting facilities, and they provided also LCs. They provided false export bills and thereby defrauded the bank, Indian Overseas Bank, to the tune of 756 crores. This information was revealed to the CBI. CBI passed on to the ED, and ED started investigation. In the investigation under provisions of Money Laundering Act 2002, it found that the accused persons having misappropriated, diverted bank funds, committed criminal breach of trust, and laundered the money so diverted. This is the provision. The Directorate of Enforcement, basing on the material and evidences on record and exercising the powers conferred under subsection 1 of section 5 of the Prevention of Money Laundering Act, PMLA, passed a provisional attachment order attaching the properties provisionally lying in the name of corporate debtor and his directors, wherein it was further ordered that the same shall not be transferred, disposed, parted with, or otherwise dealt with in any manner whatsoever until or unless specifically allowed to do so by the director. So on the one hand, NCLT has approved the liquidation. Liquidation estate definitely includes all these assets. On the other hand, what's happening? ED has attached, based on the information, defrauding information received from CBI, not the properties of the company, of the CD, and also the directors, not only attached, also passed the order that cannot be transferred, disposed, or parted. Though it is the liquidation, liquidator cannot do anything with this. This is because of the order of ED. It is further stated that the properties in the question and mentioned in PMO and provisionally attachment order that were attached fall within the definition of proceeds of crime in terms of section 2(1)(u) of PMA. Friends, I mean, so far for IBC, we generally refer to know the Contract Act, yes, Companies Act, okay, Transfer of Property Act, yes. Nowadays, it is very, very much important, friend, to also know the provisions of PMA. Now, what's happened? Most of the companies who are coming under the CIRP, I think in most of the cases, we found that the properties are attached by the ED because of the unscrupulous activities of the promoter. So I think an RP or IRP should have very good knowledge about the provisions of the Act. Money Laundering Act.
Excuse me, sir. Is there a decisive decision as yet on the supremacy of?
No, I'm
sorry, sir. Sorry to interrupt.
So the liquidator filed an application for the direction of Directorate of Enforcement for release of assets. So what's happened? Liquidator filed application before the NCLT. Liquidator filed the application before NCLT for direction on Director ED to release the assets of the corporator by withdrawing its provisional attachment order. Because liquidator argued that because these are the part of the liquidation estate, and if it is not done, then liquidation cannot be completed. They cannot realize the money out of selling the assets because it is attached. It was contended by the respondent ED that in view but ED contended that in view of section 9 of PMLA, in case of an order of confiscation has been made under subsection 6 of section 8 of PMLA in respect of any property of a person, all the rights and title in such property shall vest absolutely in central government, free from all encumbrances. ED said otherwise. I mean, it cannot be treated as a part of the liquidation asset, because section 9 of PMLA said that in case of this, I mean, if the property is procured by the proceeds of crime, ED has the power to attach the property, and in that case, all properties will based on the central government, free from all encumbrances. So whether charge created by the corporate debtor in favor of the banks, I mean, it is immaterial. It was also contended that the state will have the first right to confiscate the proceeds of crime over the right of a person to recover their debts from an accused. They said, here what's happening, the IBC, the financial creditors will recover their dues by selling these assets. But as per the act, the first right goes to the government to confiscate. It is stated that the liquidator has got alternative remedies available under section 8, 26 and 42 of PMLA Act by projecting his case before the appropriate authority under section 8, 26, 42 of the PMLA Act in case the rights of secured creditors or other creditors is affected. So ED in turn say that NCLT doesn't have any power to adjudge in this case, because what's happening, what they have done, it is as per the provision of the act, and in the act there are the sections which which provide alternate remedies to the liquidator to discuss with the appropriate authority of ED to separate the rights of the secured creditors. NCLT cannot adjudge. So issue is whether the provisional attachment order passed by ED violates the provisions of IBC, that is to determine by the Honorable NCLT whether the overriding effect provided in section 71, it is very important, friends. Overriding effect provided in section 71 of PMLA 2002 or the overriding effect provided in section 238 of IBC would prevail over the other. PMLA also has a overriding effect, notwithstanding anything contained in under section 71, like your section 238 in IBC, notwithstanding anything contained in any other act which is in inconsistence with the provision of IBC. So this issue came before NCLT. So what NCLT observed? The Honorable NCLT in deciding the matter viewed the objective of bringing these two statutes, that is PMLA 2002 and IBC 2016. What is the objective? Why these two acts was enacted by the legislature? It was seen by the Honorable NCLT that object of enacting PMLA is to provide for forfeiture of proceeds of crime involved in money laundering, which was considered and necessary to deprive persons engaged in serious illegal activities and thereby have been increasing their resources for operating in clandestine manner. The act has been created to forfeit illegal properties and to prevent the money laundering activities which are threat to financial system of the country and its integrity and sovereignty. These are very important things for which PMLA brought to picture by the legislation. Whereas the objective of bringing IBC is to maintain the assets of the city, balancing the interests of the all stakeholders. This is one way to find out the resolution to revive a company which is debt ridden, and in case not able to revive the company, to liquidate the company and distribute the liquidation assets to the creditors. So IBC, this is the objective of the IBC. Now, in one way, the object of the IBC code and also may help the increase the economy of the country, but mainly it relates to the body corporate and its creditors. So what NCLT observed that PMLA is for debarring the person to gather wealth in a unscrupulous manner, in an illegal way, and thereby threatening the country's integrity and sovereignty and financial system. The objective of IBC is also to help to increase the economy of the economy, but it only relates to the body corporate and creditors. Both the enactments of PMLA 2002 and IB code are the legislations made by the parliament, yes. However, the object of PMLA is broader in perspective than the object of IBC, as the provisions of IBC deals with only the company and its creditors and the assets of the corporate company and the debt due to the creditors. A mechanism is provided in IBC to revive the company to pay the debts to maximize the assets, whereas the mechanism is provided under the PMLA to prevent money laundering by persons who are involved in crimes and earning money to their personal advantage and to disadvantage the nation, which makes the object PMLA is wider in scope when compared to the object of IBC. This is the observation of NCLT. When the appeal filed by the application filed by the liquidator. It is a settled position of law that where two statutes contain non-obstante clause, the latter statute must prevail. You know what's happened? The liquidator also argued that, look, PMLA 2002 brought into picture earlier than IBC, which is on 2016. So the obstante clause, which non-obstante clause, which contained in the latter statute, should prevail over the earlier statute. So NCLT also agreed on that. It is settled position that a law where two statutes contain non-obstante clause, the latter statute must prevail, provided, but at the same time it observed that provided if there is inconsistency between the two enactments, the PMLA vests the statutory authorities with the power to forfeit proceeds of crime involved in money laundering to state. The IBC vests statutory authorities with the power to approve the resolution plan and to supervise the liquidation process with an object to maximize the assets of the corporator and to revive the company. Therefore, NCLT observed there is no inconsistency between PMLA and IBC, and they operate on two different aspects. Friends, it is very, very nicely adjudged. I mean, you know what's happening? NCLT agreed. Okay, look, maybe IBC containing section 238 have the edge over PMLA section 71 of PMLA 2002. But at the same time, it said that the purpose of MLA, the authorities, the power based on the statutory authorities are completely based in the PMLA and that of for the IBC are not, I mean, not completely different. So there the inconsistency doesn't come into the picture. Because the purpose are totally different. This purpose of these two statutes are completely different. So So unless until there is inconsistency, that obstante clause, non-obstante clause cannot prevail. So what order NCLT passed? The Honorable NCLT said that two different enactments, that is PMLA and IBC, provided two different hierarchies of functionaries to decide the controversies that arise under the respective enactments. When such is the case, one authority cannot interfere with the functions of the other authority and under a different enactment. The AA mentioned that the liquidator is at liberty to approach the authorities under PMLA, which is ED also said that there are some sections, section 8, 26, 42, by which the liquidator can approach the authorities under PMLA. NCLT also said the same thing. The liquidator is at liberty to approach the authorities under PMLA and seek order to release the properties from the attachment on the ground that the properties attached are not proceeds of crime and lenders are bona fide lenders. And it is for the authorities under the PMLA to act PMLA Act to decide such issues based on the record of investigation and other material placed on record before them. The relief paid in the petition was not granted to the liquidator. So NCLT said that they cannot pass the order to ED to vacate the attachment. So this is NCLT. Now what's happening? Liquidator filed an appeal before NCLAT against the impugned order of NCLT. But NCLAT observed some other way. The Honorable NCLAT observed that the similar question fell for consideration before this appellate tribunal in Bharsana Ispat Limited versus Deputy Director, Directorate of Enforcement, wherein this appellate tribunal, taking into consideration the provisions of Section 4 of Prevention of Money Laundering Act, observed and held as follows. Section 14 is not applicable to the criminal proceedings or any penal action taken pursuant to the criminal proceedings or any act having essence of crime or crime proceeds. The object of the Prevention of Money Laundering Act 2002 is to prevent the money laundering and to provide the confiscation of property derived from or involved in money laundering and for matters connected therewith or incidental thereto. So they say that the section 14 of IBC, that is moratorium, it is not applicable for the criminal proceedings. For the criminal cases, one can sue the corporate debtor. It is not no remedy. I mean, no remedy will be granted to the corporate debtor under section 14 of IBC. So PMLA is also the criminal in nature. Or the matter incidental. It is clear that the Prevention of Money Laundering Act 2002 relates to the proceeds of crime and often relates to the money laundering resulting confiscation of property derived from derived from or involved in money laundering and for matters connected therewith or incidental thereto. Thus, the Prevention of Money Laundering Act 2002 or the provisions therein relates to proceeds of crime. Section 14 of IBC is not applicable to such proceedings. The only difference between the NCLT order and NCLAT order, NCLT dismissed the application of the liquidator, saying that there is no inconsistency between these two acts because these two acts are playing under different level ground. NCLAT also dismissed the appeal, but you know what's happened? NCLAT said that section 14, that moratorium, which gives the refuse to the corporate debtor for subsequent legal suits or legal proceedings, will not be applicable for the criminal things. So, and since the PMLA deals with the criminal matters, so there is no remedy for the corporate debtor. So what's happened by the ED is correct. or does the prevention of money laundering or the provisions therein relate to the proceedings of crime, section 14 IBC is not applicable to such proceedings. Insofar as the penalty is concerned, offense of money laundering is punishable with the rigorous imprisonment, which is not less than 3 years and has nothing to do with the corporate debtor. Because corporate debtor will not go to the jail. It is the person who is officers in default or the directors who have done these things through unscrupulous work, they will go to the regular jail with rigorous imprisonment. It will be applicable to the individual, which may include the ex-directors or shareholders of the corporate debtor, and they cannot given protection from the Prevention of Money Laundering Act, and such individual cannot take any advantage of section 14 of IBC. Therefore, Honorable Enclerk did not find merit in the appeal and hence dismissed the same. Now, you know what, I mean, some of you asked me that what is the verdict of Supreme Court? Yes, you are right. The liquidator, I think he has gone to Supreme Court also against this order. But so far, I know that Supreme Court has not come out with its verdict on the, the conflict between the IBC and ED. At least I am not aware of any judgment from the Supreme Court, but I know that this is also referred to Supreme Court. Okay. Supreme Court may come out with its verdict about the this conflict of ED and the liquidator or the RPO under IBC. So any question you have? Hello? Now, friend, we discuss the issues and challenges which can be seen in handling the assignment under this section. Okay. So, in order to understand the issues and challenges, I would like to discuss with you some provisions of IBC which specifies the powers and duties of the IRP or RP. Hello? I am audible? Hello?
Yes, sir. Yes, sir.
Okay. I can't see anybody. I didn't hear. So first I want to discuss with you the section 17, which talks about the management of affairs of corporate debtor by IRP. 17.1. Again, I'm not discussing the entire section. I have only jotted down the portion, mentioning the portion which is relevant for our discussion, challenges and issues. So if you see section 17.1, it says that from the date of appointment of the interim resolution professional, firstly, the management of the affairs of the corporator shall vest in the interim resolution professional. The existing promoters are out from running the business. The powers of the board of directors or the partners of the corporate debtors, as the case may be, shall stand suspended and be exercised by the interim resolution professional. The officers and managers of the corporate debtor shall report to the interim. Friend, all these points has the relevance to our topic, issues and challenges. Just see this thing very carefully. All the officers and managers of the corporator shall report to the interim resolution professional and provide access to such documents and records of the corporate debtor as may be required by the interim resolution professional. Then section 17.1d says the financial institutions maintaining accounts of the corporate debtor shall act on the instructions of the interim resolution professional in relation to such accounts and furnish all information relating to the corporate data available with them to the interim resolution professional. So these are the provisions of section 17. Another provision is there regarding the power and duties of IRP and RP. It is section 18, which says talks about the duties of IRP. Section 18 says the interim resolution professional shall perform the following duties, namely to collect all information relating to the assets, finances, and operations. Collect all information relating to assets, finances, and operations of the corporate debtor for determining the financial position of the corporate debtor, including information relating to business operations for the previous 2 years, financial operational payments for the previous 2 years, list of assets and liabilities of the on the initiation date, and such other matters as may be feasible. So these information should be gathered, be collected by the IRP. It is a duty. Act says it is a duty of IRP to monitor the assets of the corporate debtor and manage its operations. Take control and custody of any asset over which the corporate debtor has ownership rights as recorded in the balance sheet of the corporate debtor or with information utility or the depository of securities or any other registry. So it is also another duty to take control of the assets. Now we come to section 20. Section 20 talks about the management of operation of corporate debtor as a going concern. It is also provided in the Act that the management of operation of the corporate debtor should be done as a going concern. 21 subsection 1 says the interim resolution professional shall make every endeavor to protect and preserve the value of the property of the corporate debtor and manage the operations of the corporate debtor as a going concern. It has to make every endeavor to protect and preserve the value of the corporate and manage the operations of the corporate debtor as a going concern. For the purposes of section 1, interim resolution professional shall have the authority to enter into contracts on behalf of corporate debtor or to amend or modify the contracts or transactions which are entered into before the commencement of corporate insolvency resolution process. This thing is very important. Amend or modify the, we will discuss it subsequently. Amend or modify the contracts or transactions which entered into before the commencement of corporate insolvency resolution process. D says that to issue instructions to personnel of the corporate debtor as may be necessary for keeping the corporate debtor as a going concern. And E, to take all actions as are necessary to keep the corporate debtor as going concern. So maintaining the operations of the corporate debtor as a going concern is one of the duties of the RP or IRP or RP as per the code. Section 23, resolution professional to conduct corporate insolvency resolution process. Section 23(1) says, subject to section 27, the resolution professional shall conduct the entire insolvency resolution process and manage the operations of corporate debtor during the corporate insolvency resolution process. Anything, I mean, unless until the CIR resolution plan is approved or the liquidation order is made by the NCLT, it is resolution duty of the resolution professional to conduct the operations of the shall conduct the entire corporate insolvency resolution process. To conduct the entire process, it is his duty. The resolution professional shall exercise powers and perform duties as are vested or conferred on the internal resolution professional under this chapter. So RP also duty bound, which is we have seen given to the IRP under section 17 and 18. Okay. So further duties of the, in addition to that, the duties of resolution professional as per the code, section 25 says, it shall be the duty of the resolution professional to preserve and protect the assets of the corporate debtor, including continued business operations of the corporate debtor for the purpose of subsection 1. The resolution professional shall undertake the following actions, namely, take immediate custody and control of all assets of the corporate debtor, including business records of the corporate debtor, represent and act on behalf of the corporate debtor with third parties, exercise rights and for the benefit of the corporate debtor in judicial, quasi-judicial arbitration proceedings. What are the existing case laws? Okay. If it is, if it is a criminal in nature or any something that are initially you have to represent. Maybe you okay, somebody cannot file the application against the corporate debtor under civil suit, but the RP and IRP can file, and there RP and IRP has to represent the corporate debtor. I'm coming on this. Raise interim finances subject to approval of the committee of creditors. Prepare the information memorandum in accordance with section 29. File application for avoidance of transactions in accordance with chapter 3, if any. It is also the duty of the resolution professional. Avoidance transactions, application filing. And finally, the section 29, preparation of information memorandum. The resolution professional shall prepare an information memorandum in such form and manner containing such relevant information as may be specified by the board for the for formulating a resolution plan. That explanation, I have not taken the other things, but explanation part is very important. Explanation said that for purposes of this section, relevant information means the information required by the resolution applicant to make the resolution plan for the corporate debtor, which shall include the financial position of the corporate debtor, all information related to disputes by or against the corporate debtor, and any other matter pertaining to the corporate debtor as may be specified. So these are the provisions and as per the provisions as per IBC related to the duties and powers and duties of IRP and RP. Now I want to ask you a question. After going through all these provisions, what do you think the challenges and issues one IFP and IRP or RP may face in handling this wholesale or retail trade assignment? Anybody can volunteer. What sort of issues can be faced? Because I have discussed with you all the provisions and the entire provisions and the major provisions for which is given in the IBC as the power and duties of IRP and RP. Any one of you have handled this assignment in this sector, wholesale or retail? No one? Hello, I am audible? Hello?
Yes, sir. Audible, sir.
Yeah. Any one of you handle assignments in wholesale and retail sector? Okay. So can I request one thing? Can we have 10 minutes break? Then we will come and see what are the issues and challenges one may face in handling the assignments in this trade, in this sector, and in wholesale and retail trade sector.
Yes, sir, we may take 10-minute break. We can
We
take.
can have just have 10 minutes rest, and then we'll come back. Okay.
Okay, sir.
So can we start? Hello? Can we start now?
Yes, sir, you can start.
Okay, let me share it again. Is it visible? Hello? My
Yes,
presentation is
sir, it is visible.
okay. Thank you. So, friend, there is no one who handled this assignment. I mean, experience in handling this. Good. Then, if you discuss the issues and challenges faced in handling the assignment, we will find we can segregate this under the segregate these issues or challenges under the following heads. We have already gone through the provisions of IBC, that what is the duties of IRP-RP, the IRP-RP required to handle these things as a going concern. IRP has to give all the information to the resolution applicant for preparing the resolution plan through information memorandum, etc. So based on these provisions in IBC, we can classify the issues or challenges under and in handling these assignments under this sector as follows. Firstly, the management. Again, these are my from my side. Anybody can add, or if you have any experience or if any knowledge, can say. And please unmute yourself and say. So according to me, the first issue may be the management of the corporate data. Because, friend, I believe that IRP or RP may lack the core competence in run the shops, handling cash for geographically dispersed area. Maybe it is not so relevant for the wholesale business where the number of establishments, the unit, operation unit is less compared to retail. But in retail business, where the shops are running in numbers and it is geographically dispersed, I think it is a challenge for the IRP or IRP for the lack of core competence in handling these shops. Secondly, I think that issues and challenges will come on compliance and regulatory reports. Friends, nowadays, I think it is very much clear that as an RP or IRP or RP, you are responsible to comply with all the statutory requirements. Not only the payment of dues during the CIRP period, but also filing the reports, take registration. There are a number of statutes. Under central and states, GST, income tax. Then for state it is shop and establishment, professional tax, many things, and compliance with all these statutes, ROC reporting also there. So and make the registration of these things can be a challenge for the IRP, especially for the retail business, because the state statutes are state specific. So if you have the registration under West Bengal for professional tax, you have to take the registration in Tamil Nadu also. If you have any unit there, if you have any selling unit in Tamil Nadu, you have to take another registration for professional tax. It is not a common one. Then I think another challenge can be faced is the valuation of the corporate debtors. Because you know what's happening here, some new dimension will come. You will find that some shops are closed. Retail thing, I mean, retail business, retail sector, they suppose a retail entity deals with the garments. But garments, for that retail entity, some shops are open and some are closed. So how to value the, how to make the valuation for the corporate debtor? What will be the value for the closed shops? Also, you know what's happened, maybe the shops are open, but the footfalls are varying. The shop which is in one locality has more, I mean, the footfalls are more than the shops which are located in other locality. So I think the valuation is also and will be a challenge which will be faced by the IRP or RP in handling these things, because IRP is to give all the information through the information memorandum to the resolution applicant. You know what's retail entities operationally spread out their activities. I have seen one, in one of the cases I have seen that thing, that one retail entity which is based in, which again in the garment sector, garment business, but it is based in West Bengal. But they open up their outlets in other states, and where they have no base. So maybe this is a cause for the insolvency of the company or the entity, because they have increased their business in other states where they have no base. And when you handle the assignment, you will find the very difficulties, very challenges for handling the cash in those regions, on those states, because all the small shops are there, and also handling the managing the staffs in those areas. I think it is a very these things will be an issue, and it will be a challenging issue for the IRP when the number of things are many in different locations, in different states. Within the states, one scenario, other states will be completely different scenario. Any, do you want to add anything? In both the sectors, that is retail and wholesale, inventory management is an issue. Stock replenishment is an issue. Though ERP is available, the same may be costly. Also, lack of efficient staff to operate ERP. You know, I mean, taking inventory, I mean, having inventory control, because you know, as per the provision, you have to take control of everything. If the company is running, it is your duty, utmost duty, to make it a going concern. Utmost duty to run the CRP process as a going concern. And for that purpose, taking inventory stock for all these locations is a challenge for the IRP or RP. You can say that okay, ARP are available, but the ERP means, I mean, if you talk about the SAP, all these things, these ERPs are very costly. So if the entity is not so, I mean, what should I say? If not so big, it will be very difficult. If the fund is not enough to introduce this ERP, So it will be a challenge, and also, you know, getting appropriate person, efficient staff to run this ERP is a challenge. Nobody can handle these things. These ERPs are very sophisticated, and this requires the knowledgeable person to handle this ERP. So again, I think this inventory control for the retail and wholesale sector is a challenge for the IRP or RP. Then come withdrawal of franchises. I told you, I gave you the example, no? That one entity deals with the garment retail company. They opened up their establishment in other states where they have no base. Now, as a RP or IRP, because you have the power, I said, I mentioned also, under section 18, you can terminate. Under section 20, so RP can terminate the agreement. So you can terminate the agreement of franchises. You can close down those franchises. But again, it may lead to the legal issues. When you will close the franchises, if the agreement is not over, is not expired, lots of legal issues will come. Question of compensation will come, definitely it will come. And coping up with all the situations within the stipulated time frame, that is 180 days, or if you consider the extended 270 days time frame, it is a challenge for the RP or IR. Clear, agreed? Hello? Then I have already told you, therefore wholesale business, the amount of investment is huge. So huge amount of investment is required to run the wholesale business as a going concern. And in order to maintain this status, we require the funds. But you know, generally what's happened, it is seen that COC is very reluctant to invest fund for your CIRP process. So that is also a challenge for the IRP or RP. CIRP also not agreeable for the proposal of the IRP or RP to raise the interim finance. They pose lots of questions. In fact, they deny, they have the denial for the proposal of the RP or IRP to have the interim finance to run the CIP process. So this is a challenge for running the wholesale business because of its huge investment. Then claim management is a challenge. For retail, number of claims are much with varied nature. IRP, RP doesn't have any adjudicating power. As such, number of NCLT litigations gone up leads to time limitation. When you, what's happened, you know, when you file the, when you advertise a public announcement, you receive the claim from the creditors. No? I mean, an operational creditor or financial creditor, they file the application. Now, when the application is approved, it is the duty of the IRP to advertise for the public announcement and ask for the claim. And in case of retail, wholesale also, the number of claims are such big in volume that it is and varied nature. So it is very, very difficult. This is a really challenge for the IRP to admit those claims. And you know what's happened, as per the decision of Supreme Court, IRP and RP doesn't have any adjudicating power. You cannot say that I'm rejecting this claim. So as a result of which, what's happening? Either you have to file application before NCLT, or the creditors will file applications against you before NCLT. And the NCLT litigation will go up. This again leads to the time limitation of 180 days or 270 days. So according to me, this is also a challenge. Claim management is also a challenge faced by the IRP or RP in handling assignments in this sector. Identify and take control of assets in absence of proper of any available books of accounts. First of all, I told you that if it is a geographically dispersed scenario where the employees, I mean, you have very lesser control over the employees. So getting proper document, proper information, proper figures from them, from these locations is a really a challenge. Not only that, to identify and control of assets in these areas is also a challenge for that. Because all are small things. And you know what's happening generally, this retail business, barring from these big thing, big companies which you have named in my slide, or mostly are very small and they don't have any proper identification of the assets. So you don't know whether you are in control of the entire assets of the corporate debtors. And also, you know, sometimes what's happened, the business, the example which I have given, that company is now closed down its operation. You don't get any books of account from them. I mean, not from the entire thing, but from some shops, for some locations. There is a absence of books of accounts there. So that is a challenge for me, because you have to control all the assets of the corporate debtor. Staff, generally contractual employees, leave job, no information available. You know, they left the job. Mostly this type of entity, this retail business, for their other units which are not very big, small things, small shops, they don't engage any permanent staff there. All are working on a contractual as a contractual employee. And you know, after this initiation of CRP, they leave the job. They go for they look for the other jobs, and as a result of which, there is no one to feed you the information. Either you have to personally visit those areas, or it is a challenge, for you. Another thing, according to me, is the receivable management. For mostly, these retail shops, they don't have proper records for the receivables. As an RP or RP, it is really very difficult to know what is the actual due position of the corporate debtor, whom they have sold. Mostly they indulge in the credit sales and they don't keep any record for that. Not proper books of accounts also. So it is, getting money from your creditors, from your debtors. For getting money from your debtors is a challenge for the IRP in handling this handling assignment in this sector. Then frequent absenteeism of the all these points I have noted are based on my experience. There may be some other things also which I have not come across, but I think all these things are enough for an RP and IRP to perform his duties within the stipulated time frame of 180 or the extended time frame of 270 days. Frequent absenteeism of the staffs in dispersed area affects operations. You don't have any control. They simply don't come. Then the major thing is the siphoning of money, whether it is a small entity or big entity. Most of the entities in this sector, they indulge in siphoning of funds by the promoters. And it is a big challenge for the IRP or RP to determine this siphoning. You know, I think you are aware that it came in the paper that as per the report, RP has arranged detection of 14,809 false transactions of future detail. You know, recently future detail has gone to CIRP, and there the RP has alleged the detection of 14,809 crores of false transactions done by the promoters of the future detail. Also the Rotomac case, which we have discussed, there was a defrauding there was defrauding Indian Overseas Bank by the company, by the corporate data Rotomac, by giving false exposure to the tune of 756 crores. And all this money they have taken out from the organization. And finding out these things, I think it is a challenge for the RP. Then also, you know, the application, we have also seen that, you know, that section 20, that it is the responsibility of the RP to file applications under section for avoidance transactions or profit transactions. So profit transactions are many more in wholesale and retail sector. This increases the litigations in NCLT and thereby endanger the time limitation. Not only time information, I must say that it also endanger, it is also pose challenge to the RP or IRP to fund the lawyers, their counsels. Huge legal costs the RP or IRP has to incur for this purpose, for filing the profit transactions, application against profit transactions. And as I said, that COC is very reluctant to fund this fund for these purposes. So this can also be considered as the issues or challenges. So friend, I think we can segregate all these things, all these challenges, issues or challenges in two broad heads. One is long term, where more actions is required or less action is required. Other is short term, where more action is required or less action is required. Long term, more action is required is the determination of profit transactions. Long term, less action is required. It is reduction of employees or staff strength. Long term means it requires the discussion with the union or the individual employee, give them the construction, but not so complicated. Not actions involved with not so much, but it takes time. Unlike the profit transactions, the actions are not so much for the reduction of staff strength, but it is a long-term activity. Short-term, more action is required. You can say registration with various authorities. It purely depends upon where, in which sector this entity is operating. What are the licenses? What are the statutory clearance is required? But okay, you have to take this, you have to comply with all these things within a short period of time. You cannot take long time, because then the non-compliance issues you will face with the non-compliance issues, but it requires more actions from your part. And short-term less action required, you can say that closing down the unviable shops, you can tell unless and until the agreements are very clearly specified. If it becomes a legal issue, then again it will be a long term and more action is required. Otherwise, for small things, generally it is seen that for very small shops, you can take the decision very quickly. You can close down those shops. If it is owned by the entity, then there absolutely no problem. If it is your own premises, then it is no problem. So, and it has to be done in short term, because at the same time you have to consider that you have to run the company as a going concern within the stipulated fund. So it has to be completed in short term, and maybe the action required is not so huge. So these are from my side the issues and challenges faced in handling the assignments in this section. Again, I am telling you, these all are noted down based on my experience. You can share your experience here if you have any, or you may face some other experience also when you will handle this type of assignment. Okay. Any question you have? Hello, I am audible.
Yes, sir. Yes, sir.
Any question you have, sir?
No, sir.
No question. Now we have come to the end of our presentation. This is way forward. What we look. Since its inception, IBC has become an important reform in a string of such measures introduced by the government to accelerate the Indian economy. I think all of you will agree to this. Because, recent past, whatever the reform mechanism introduced by the government, IBC is the most important one, reform mechanism. It has been a game changer in the realm of economic legislation, as by putting the place a comprehensive one-stop shop for insolvency resolution. It has also paved the way for ease of exit in case of honest business failure. Prior to IBC, there are lots of acts or regulations for the addressing the insolvency provisions for the company. But IBC integrated everything, and it becomes a one-stop shop for the insolvency resolution. And not only that, not only the insolvency resolution, it also provides for the easy exit to the honest business failure. You will agree now, if you find that your business is not a viable one, maybe it is not your fault. When you plan the business, the economic scenario was different, and due to some reason, it has become completely different one. And you have no intention to default with the money of the bank. So it is an honest business failure. And if it is so, IBC gives you the gives you the opportunity to come out with to exist from this type from your business by providing you the provisions for voluntary winding up, for filing applications under section 10, etc. IBC addressed the shortcomings in erstwhile staggered insolvency laws in India and has brought them under one umbrella. What I am telling you that prior to introduction of IBC, there are many acts or laws. SICA was there, even Companies Act 1956 or there, Provincial Resolution Act was there, Insolvency Act was there. Then what is that? Provincial, then Presidency Town Insolvency Act was there. The main problem is that all these acts are operating independently. So what's happened? It is possible for one to file case in one act and also file case in another. One can file the winding up petition under Companies Act 1956. At the same time, it is possible to file the application under Provincial Insolvency Act. But the IBC, after the introduction of IBC, what's happening? All this and most of the acts are repealed. All the are maybe amended, and all these provisions of related to insolvency are come under the one umbrella of IBC. These are I'm all talking about the present affairs of IBC so that we can understand the way forward. The outcomes of the code have played out well in improving India's ranking in ease of resolving insolvency indicators internationally. The code provides for both substantive as well as procedural aspects of insolvency. Therefore, insolvency resolution framework has been made uniform for all sectors. We have discussed the position of wholesale and retail sector. There are other sectors also, like your real estate sector is there, manufacturing sector is there, service sector is there. Irrespective of the sector, since the IBC, since the code address the procedural aspects, it is uniform for all the sectors. But this leads the issues. What issue? Which issue? As the code has not been framed sector specific, a study of insolvency cases in India has found that all sectors have resolution delays. Because the demand, the requirement of the sectors are not equal. They are not uniform. They operate in different planes. So the study says that there is a delay in resolution delays, because if you apply IBC, uniform IBC, that may not suitable for one respect for a sector, and as a result of which there is a delay. Delay means delay from that stipulated time frame of 180 days or extended time for up to 70 days. So what the study says that the wholesale and retail sector are taking 236 days more to get the final approval for a resolution plan. Because all the litigations, everything, all the complications comes, everything comes. So as on an average, 236 days more it takes to get the approval for a resolution plan for wholesale and retail trade sectors. Construction sectors are taking 279 days more. Electricity and other sectors are taking approximately 197 days more for the same. All these are because of the uniform code the IBC provided us for addressing the insolvency of the corporate debtor. The same study suggested that a corporate debtor from the service industry is subject to more delays as compared to the non-service manufacturing industry. Thus, the uniform timelines provided for under the code may not suit all the sectors well. I think you will agree with this. You can understand this, appreciate this. Service sectors, they have the totally different requirement than the normal non-service sectors. The claim that I mean, what should I say? The amount, the nature of creditors, all are different. Now, therefore, there is a new proposal mooted by the government. Government is now seeking to amend the IBC. Friends, I believe you are also aware of this. You heard these things. So there is a new proposal mooted by the government to amend the IBC, seek a special mechanism for the real estate sector, whereby separate projects can be dealt with separately. However, there has been a growing consensus among experts that in India, like the UK, needs separate insolvency processes for several other sectors too, not only the real estate sector. This amendment is required for the other sectors too, and this is a way forward requirement from IBC. It can be said that the present code is not suited for all sectors. There are two reasons for this. Firstly, the general provisions need not suit each sector because some can be counterproductive to value maximization, which I have already discussed with you. The requirement is because the requirement is different. Secondly, certain sectors are highly globalized and therefore must have the harmonization of the sector specific Indian law with the international framework. Friends, I think there is another demand from the IBC that your cross-border insolvency, introduction of cross-border insolvency. This is because you know that due to this liberalization, the Indian companies having their, all the foreign companies have their businesses in India is tremendous. But IBC till now have no such, only 234 and 235. No other, and that's also totally insufficient. But IBC has no specific provisions for handling the cross-border issues. Some sectors are polarized, and this requires the harmonization with the international law. So this is also a way forward requirement from IBC. The number of cases admitted for the corporate insolvency resolution process under the code pertaining to wholesale retail trade increased significantly. If you see the study, the number of IBC cases for the retail and wholesale has gone up very much. A good sign is that. I'm coming to that. The share of the trading sector with 567 cases from 554 in June 2021, in total 5636 insolvency cases stood at 10%. So this trading sector catering 10% of IBC cases. The manufacturing sector accounted for highest share of 40%, while real estate share is 21%, construction 11%, hotel 2% among the 5 major shares. These figures indicate that this is the good sign, because these figures indicate the rising acceptance of IBC as an effective debt resolution. So everybody can understand they are not going for other, because the main benefit which IBC provides is the time frame, very short time. I think you will remember that all good days, that 4 years, 5 years, you file the case and it continues for 4 years, 5 years to have the decision. Then again it is challenged. Then again another 4 years, 5 years. But in IBC, even if it is challenged in NCLAT or Supreme Court, on those days of 4 years, 5 years. So it is now accepted by the people or the creditors or the lenders very much, and as a result of which these cases have gone up. But again, since these cases have gone up, these requirements are now pop up very heavily. what we have discussed from IBC. India's rank for resolving insolvency in World Bank's ease of doing business reports has improved from 136 in 2016 to 52 in 2020. It is a remarkable achievement done by our country. And this is possible only because of introduction of IBC. The rise is primarily attributable to implementation of the code and the progress made thereunder. However, IBC being a fundamental and dynamic law, challenges will keep appearing. As of now, major issues faced are attachment, which we have already discussed. And one of you have rightly said that this issue is pending before the Supreme Court. Supreme Court will come out very soon about his verdict. But till now, it is an issue. As of now, the major issue faced faced are attachment or action by PMLA or ED authorities in IBC matters dealing the CIRP process, group insolvency, and cross-border insolvency. These are separate. I mean, these are also issues. Sorry, I think it is not written properly. As of the major issue faced by the PMLA and ED authorities in IBC matters, also, sorry. As of now, the major issues faced by the attachment or action by the PMLA or ED authorities in IBC matters derailing the CIRP process, because CIRP process gone to a toss. It is, I mean, because of the litigations and the time-consuming litigations. Also, the matters related to what I said, the group insolvency or cross insolvency, these are requirements from the IBC. These are the challenges which IBC is facing nowadays. Government has already taken note of these issues. Necessary amendments of the code and necessary amendment to code and regulations guidelines are expected. Waiver of past non-compliances. This is also a requirement, way forward requirement from the IBC. What is that? The waiver of past non-compliances under various litigation should be spelled out. Friends, if a resolution applicant submits its application, submits its plan based on the information memorandum, it is absolutely unfair to charge him with the non-compliances or the various past resolutions and compel him to pay the dues of the authorities. Till now, it is an issue. These are issues, and it is required that IBC should address these issues. Whether the resolution applicant will be allowed to run the show with a clean set or not. While multiple judgments have approved extinguishment of contingent tax liabilities, yet tax authorities continue to issue notices and claim for outstanding dues pertaining to the pre-CIRP period. It is happening, friends. I think all of you are aware also. And these things are putting IBC under challenge. Assurance is also required that upon approval of a resolution plan, all litigation initiated in the pre-CIRP period at whichever forum court tribunal should stand terminated. So these are the requirement, way forward requirement from IBC. Capacity building, and this is also very important. Capacity building of NCLT due to increase in administrative functions will be necessary for a, if, two things. I mean, I think you will be agreeing. If your case is heard today, have you seen how long it takes to upload the order? Not the final order. I mean, day-to-day order. Day-to-day hearing is done. How long it takes to upload the order in the portal of NCLT? According to me, it is more than 15 days. When you see the order, the next date is coming. And if you find something is mentioned there, you have hardly any time to rectify thing or counter that thing in the next hearing. Also, you have seen that if something is hard today, the next date of hearing is absolutely not less than 1 month. So all these things are jeopardizing the advantages which the IBC is providing to the economy, to the the stakeholders of the code. So capacity building of NCLT is very much way forward requirement. Litigations have undoubtedly led to the delays in closures of CIRPs. A clear criteria for appealing against the resolution plan should be set out to streamline the resolution process. Anybody, any Tom, Dick and Harry not satisfied with the resolution plan can file the application now against the resolution plan, even after approval by the NCLT. And that is accepted and heard also. So a clear-cut guideline should come for this. And another thing, I believe that valuation standard is still not formalized. It is mentioned that valuer should value the assets as per the internationally accepted standard. But there are some, even then, there are some, what should I say, difficulties in complying with that standard. Until now, the valuation is done based on the personal wisdom of the valuers. Of course, it is more, it is no longer an arbitrary one, more structured, more information or more justification the valuer has to give in his report. But even then, it depends upon the wisdom of the individual. I think you will also agree. But so we require a valuation standard related in complying the requirement of the Indian IBC, Indian Insolvency Activities. So friends, I am through. The next one is question answer. If you have any question, you can ask me. What is the time? Any question you have? Hello. Madam, are you there? Hello. Madam from ICSI, are you there?
I think she is not there. She is not replying.
She is not replying. So friend, if you have any question, you can ask me. Otherwise, we'll conclude the session. I can't see anybody. I don't know. Ah, now I can see. Yes. Madam, are you there? Hello. What is her name? I don't know.
Hello.
Yeah, madam.
Yes, sir.
So I am through with my presentation. Now the next session is question answer. So if the participants have any question, I may answer. Or what I said that it should be a interaction. I can also increase my knowledge through this interaction. But what to do?
So you can email.
Can I conclude my session?
Pardon, sir?
Can I conclude the session now?
Yes, sir, you can.
Okay.
Thank you so much, sir.
So a big thank to all of you from my side. I sincerely hope that I am very much clear. I have made the things clear to you. The dispute, existence of dispute, and also the requirement for IBC. These are actually the main subject of discussion for today's session. So I believe that I have made this clear. So thank you so much.
Thank you very much, sir, for taking up the session. The session was very informative. Wonderful. Sir, you are requested to please share PPTs.
Sorry,
So please share your PPTs.
I couldn't hear you. Sorry.
Hello.
Yeah, tell me.
Yes, sir, I am audible.
Yes, you're audible. Tell me.
Sir, can you share your PPTs?
Sure. I'll share. I'll share too. I'll
Okay,
share.
sir. You can share to me.
Yeah, sure. I'll share.
Okay.
Okay.
Thank you, sir. Thank you very much.
So thank you. Thanks a lot. So I'm closing this session.
Yes, sir.
Thanks.